And here are your top stories. The Hawks seize control. Christine Lagarde lays the groundwork for the ECB's first rate hike in over a decade and signals more to come. Italian yields jump, but the euro tumbles. China inflation moderates as commodity prices cool and consumer demand weakens, leaving room for government stimulus. Next up is US CPI, which is forecast to top 8% once again. Mohamed El-Erian says there is still worse to come.
Now, this is what we're looking at for the futures. A bit of pressure on the FTSE 100, Tom, down some 0.6%. That future is really doing the same. It's all about the China outlook. And then a lot of questions, of course, on that US CPI data. Yep. What that means for Fed tightening. And I have to say, traders not that convinced by what the ECB said yesterday.
The Goldman Sachs coming out and saying that the ECB could now be looking at 50 basis points in September and October. Clearly, the ECB, Madame Lagarde, leaving the door open for 50 basis points in September. And that, of course, is part of that more hawkish tilt that you're seeing from the governing members of the European Central Bank. In terms of how things are opening then, the Spanish IBEX is lower by 0.5%. The FTSE 100 lower by 0.4%, down 26 points just in the first few seconds. We do, of course, have that US CPI later today that will form a view, a more concrete view, arguably, on where the FOMC goes in his September in play for the Federal Reserve as well, with an additional 50 basis points. Above 8% is what you're expected to see when it comes to those consumer prices. And we know there's real pain being felt, particularly around the petrol pump in the US, the gas pump at least. The CAC 40 down by 0.7%. The German DAX as well, lower by 86 points. Let's switch things on, see how things are playing out cross-asset. Francine mentioned China, so the softer inflation giving space there for policymakers to step up their easing, but you do have additional lockdowns in Shanghai. Just a reminder of the constraints around COVID-0. After a sharp sell-off on Wall Street yesterday, more than 2%, you're seeing futures pointing to gains just of around 0.3%. Euro-dollar remains in focus for us, given the volatility of the single currency yesterday on the back of that statement, and then the press conference from Madame Lagarde. 106 on the single currency, just up 0.1%. And the Italian years still firmly in focus in terms of those Italian yields. A marked jump of around 20 basis points yesterday. 6 basis point move today, so building on that 366, and the spread, of course, between the BTPs and the bunds in focus amid concerns about fragmentation. MLI's Ven Ram says there is a risk of a bond market tantrum in Europe. 122 on Brent, currently down 0.4%. Some of that demand expectation around China starting to ease when it comes to oil. Francine.
Yeah, Ven Ram with our bond expert, and you also alerted me, Tom, to the fact that he was talking about espressos and actually the froth of espressos, looking about fragmentation. So we're definitely getting him on the program a little bit later on. I'm looking at the sectors, and actually there's not one sector that's in the green. You see a little bit of green on your screen because there are earnings, or not earnings, we don't have any earnings today, but you do have some companies that are slightly higher, but actually out of the 19 groups that make up the stock 600, retail is the one that's losing less, but it's still down some 0.2%. Financial services, real estate, technology down between 0.8% and 1%. So they're the biggest losers in today's trading session, Tom.
Credit Suisse, we've had this stock on the board every single day, at least the last 3 days, it seems. The Swiss lender, of course, all the news flow around this bank, and of course the reports that State Street were looking at. Well, Thomas Gottstein came out yesterday at the Goldman Sachs conference in Rome and said that is a ridiculous question. State Street also putting out a pretty firm denial around the reporting from that blog out of Switzerland that they were looking at Credit Suisse. Currently, that stock is down 3.4%. Ericsson being probed by the SEC stateside over its operations in Iraq, down 2%. And Ferrari Ferrari. There was news out towards the end of the day yesterday that they're expanding their plant in northern Italy to build out their electric vehicle proposition. They have a meeting next week where they're expected to lay out their plans for EV and the longer-term strategy for Ferrari over the next 4 years. Let's get back to the macro, though. The ECB bringing down the curtain on years of ultra-loose monetary policy. Policy officials committed to a quarter-point rate hike next month and signalled a bigger one to come in the autumn as fresh forecasts showed a faster pace ahead for prices than earlier thought. President Christine Lagarde defended policymakers who got it so wrong on inflation.
All international institutions, all forecasters of repute have actually made the same mistake of underestimating or not anticipating some of the developments, such as the war, such as the energy crisis.
Apart from Larry Summers and Mohammed El Arian, of course. For more, we are joined by Bloomberg's Jana Randau in Frankfurt. Jana, we learned a lot more then on the ECB's policy path this year than expected. Take us through what the Governing Council decided yesterday and the importance of those forecasts.
Yes, good morning. So what we learned is that asset purchases will end as of July 1st, which was not really the surprise here. The surprise was that the ECB de facto committed to a 25 basis point rate increase in July, a 50 basis point increase in September, and that it said interest rates would rise on a sustained path. So they would rise also in the fourth quarter and all the way into next year. And that is indeed significant. The ECB, of course, hasn't raised rates for more than a decade, and committing that far into the future just shows you how nervous they are about inflation. The updated projections show price pressures above 2%, above their target, also in 2024. Yeah. And that convinced even the most dovish policymaker yesterday that the time for action has come.
Hi, Anna. Good morning. Happy Friday. So is this a win for the Hawks?
You could see it that way, because certainly the Hawks have been out talking about the possibility of or the need of a 50 basis point hike at some point early in the cycle. But what it really is everybody giving in a little bit. The Hawks agreed to that 50 basis point hike only in September. The Doves would have wanted to see a more cautious stance after the third quarter, and they had to give in on that sustained increase in interest rates after that. So there is a compromise there. Everybody had to make some concessions, but overall, what it tells you is that they are really concerned about inflation taking off, about second round effects materializing, and really seeing the need to act.
Okay, Bloomberg's Jana Randau on that announcement, a statement, of course, from the ECB and the press conference from Madame Lagarde amid that pivot, that important pivot for the European Central Bank. Thank you. Now, China's inflation has moderated as global commodity prices cooled and consumer demand weakened. That may leave room for the government to ease monetary policy and add stimulus to shore up an economy that, of course, remains under pressure.
Now let's bring in our chief Asia economics correspondent, Enda Kern, in Hong Kong. So, Enda, what were the key takeaways from China's inflation numbers?
Well, it's such a different inflation story in China to the rest of the world, Francine. Consumer prices coming in at 2.1%. There was actually a big uptick in fresh fruit and veg prices, but there was also a big slump in pork prices, down around 20%. So that took pressure off the headline number. Of course, we know consumers are under so much pressure around China because of the ongoing restrictions and the lockdowns related to COVID. So the net takeaway for the consumer inflation story of 2.1 is still a pretty subdued picture. Producer prices, the one we all look for, because China was said to be a source of global inflation last year. That's slowing down as well, 6.4%, reflecting a cooling in commodity prices that will, of course, take some pressure off factories. And in fact, some economists are now saying China might become a source of disinflation for the global economy rather than inflation. But the net takeaway, inflation in China is subdued, and that does certainly clear the way for the authorities to focus on putting money into the economy to support demand.
Enda, thank you so much. Our Bloomberg chief Asia economics correspondent, Enda Kern, in Hong Kong.
Okay, joining us now is Kiran Ganesh, Global Head of Investment Communications at UBS. Kiran, thank you for joining us in the studio this morning. What do you make then of this pivot from the ECB, the more hawkish stance there from central bankers at the ECB, and leaving that door open then to potentially 50 basis points in September and the read across for European equities?
Yeah, well, certainly a hawkish surprise from the ECB. So we're expecting now 25 basis points in July, followed by 50 in September. We'll see what happens for later in the year, but we're thinking another 25 basis point hikes later in the year. So certainly a hawkish surprise. In terms of the read across into asset markets, I think it was interesting to see that the euro actually depreciated yesterday despite that hawkish surprise. And we think that what it's going to take to get the euro going is really to see inflation actually starting to come down. We think that if the ECB was increasing interest rates in an environment where growth was strong and inflation was falling, you'd see the euro appreciating, but that's not the case today.
I know, my espresso, look at this. My espresso has gone up like 40%. I tell Tom every day, he's like, we know the espresso and the coffee price have gone up. When does inflation start coming down overall?
Yes, so we think by the third to fourth quarter of this year, we should start to see inflation starting to fall in the Eurozone. The big problem, of course, is energy prices, and that's obviously also the most unpredictable because of the situation in Russia. So we think it should start to come down in the third to fourth quarter, which should start to leave room for the euro to appreciate later in the year. But for the moment, we're expecting it to stay range bound against the dollar.
How fully priced in is inflation at this point across these markets?
I think the idea that it stays elevated and declines to levels which are still high-ish but manageable, that's what's getting priced today. If we start to see an environment where perhaps energy prices keep rising and that headline number stays high, or an environment in which wage growth starts stimulating more inflation and that dynamic takes hold, then that's not priced, and that's probably the downside scenario. So, our base case is that it stays elevated over the next 1 to 2 years above target, but is moving in the right direction, and that should be reassuring for markets.
Jaron, there's something that actually surprised us this morning. When you look at the UK and what Boris Johnson's saying is, look, one way of dealing with inflation is also to cut some of the tariffs when we import goods. Now that, I don't know whether that will change, but is there something that we've said, a lot of these countries are becoming, I guess, less global, more inward looking, and could that change because of inflation?
Well, I think there's a couple of things going on. So we've heard similar comments from the US and similar discussions about whether cuts in China tariffs might also take hold because of the inflation. But at the same time, that picture of countries looking more inward is also a sort of convenient excuse in a time of inflation. So we've seen, more export bans also being put in place, and that makes supply chains more complicated. So I think this dynamic certainly makes it more complicated. If we do see the world moving in a more global direction, then that should certainly help bring inflation down, but inflation also stimulates countries to look more inward as well.
So consumer prices out of the US later today, is there a number that you're looking for that would bake in 50 basis points in September? What is the range in terms of monetary policy reaction to that CPI print, whether lower or above the forecasts?
Yeah, so we're looking for it to come in above 8 again. I think the 50 in September is pretty likely at this point, and I think unless we see a real negative surprise from CPI, then I think the 50 is pretty likely for September already. So we're looking for a number above 8 today, but the key is going to be not so much the headline because of what's going on with energy, that core number, what's happening with services, what's happening when we exclude energy and food prices. That's what we're going to be focusing on. We expect to see that continuing to come down and move in the right direction, but a hawkish path for the Fed is still most likely.
Yeah, can it be too aggressive? I mean, this is the million-dollar question that actually, markets need to ask themselves. Is there a danger that they throw everything in inflation and forget about growth?
Potentially, and maybe that's a bit of what's going on in the Eurozone. I don't think that's so much the case in the US, where you've got such a strong labour market that we think that higher interest rates can be relatively well withstood by the economy. When we look at the financial markets as well, it's quite interesting to see that volatility in bond markets actually started to decline when the Fed started to get more aggressive. So it feels like, from a market perspective, central banks getting on top of inflation is still probably the main concern.
Okay, Kiran Ganesh, staying with us. We're going to get more from you, more of your calls after the break. Thank you for breaking down the inflation story, of course, on the back of the ECB. And as we look ahead to the CPI out of the US, coming up, Druckenmiller's warning, of course, the famed investor, saying a recession is likely to strike next year. This bear market, as he describes it, is not at an end yet. We get the details next. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Welcome back to the Open, everyone. 15 minutes into the European trading day. You can see a little bit of traders anxious, or I was going to say angst and anxious at the same time. Happy Friday, everyone. Everybody needs
I like that. It's a new word.
And an espresso. I have to say what markets will be looking out for, of course, at US CPI a little bit later on, and then it didn't seem that what the ECB was trying today landed maybe as well as they wanted it to in terms of currencies. Now, Stanley Druckenmiller has a warning for Wall Street. The sharp decline in the stock market is not over just yet. He said that his best guess is that we're 6 months into a bear market. Now, the NASDAQ Composite Index has dropped more than 20% from its previous peak. Well, joining us now is Kiran Ganesh. He's Global Head of Investment Communications at UBS. So, Kiran, when you look at some of the market, where do you see the best value? If you look at some of the, I guess, the market strangeness, is that also a CFA level 5
it certainly is.
word?
It's on the list, isn't it?
Where do you find opportunities?
Yeah, so we're focusing on, we see value in value, essentially. So that's obviously done quite well over the past few months, but we think that that trend is going to continue. When we look historically, when inflation is elevated, value tends to outperform. We think that environment's going to persist for the next 1 to 2 months.
Don't you need the growth component as well? Growth is slowing, doesn't have an impact on value. How long does that trade hold out for?
Well, when we look at the value sectors, then you've got things like financials, you've got things like energy, and of course they are sensitive to growth, but at the moment they've also got some idiosyncratic drivers. So energy, we think, gets supported by the oil prices. The financials are going to do well out of this rising rate environment.
They haven't. Financials have not performed well year to date.
Yeah, no, it has been interesting to see that, but when we look at the difference between the financials performance and where rates are today, there's a pretty historic gap starting to open up. So when we look across the value sectors, that's actually looking like the cheapest at the moment. Maybe a bit more confidence needed that we are going to avoid recession, but we think that sector is looking relatively cheap today.
Kiran, is there anything commodities actually that we should be buying right now? And is there a commodity that where there's still room to pace? What will do better than some of the other commodities?
Well, it kind of sounds funny to say oil after it's done so well at the moment, but we think that actually at the longer end of the curve in oil, we think is where the opportunity is. At the short data contracts up above 120, we think that is pricing in this tight supply environment. But when we look further out at what the market's pricing for December, we think that's too low. We think oil is likely to be ending the year more like 115, 120, up at those levels in this still tight environment. So we still see an opportunity at the longer end of the oil curve and also in energy equities, which would also benefit from that higher for longer environment in oil.
There's been a lot of discussion around fragmentation in the Eurozone. You're looking at BTPs now. The 2-year yields up 10 basis points, the 10-year up 3 basis points. Valerie, our chart expert in the gallery, pointing out this is bear flattening across the yield curve in Italy. What is the read across to the credit space then from some of the imaginations within the Eurozone sovereign yield space? Is there anything that looks attractive in fixed income at this point?
Yeah, so we think the breakup risk in Europe is very low. I mean, we've had all of these programs put in place, obviously during the Eurozone crisis and during the pandemic. So we think the breakup risk is low. Where we're seeing opportunities in fixed income today is actually in the investment grade space and select names which are likely to be relatively more defensive in an environment of slowing growth. And we think that in the government bond space, they're still going to be quite volatile around the rates picture. High yield, again, that's going to be a bit sensitive around growth expectations. Spreads are still not that wide. But in the investment grade space, with the increase we've seen in yields, we are seeing some interesting opportunities emerging there.
Anything in currencies? I mean, currencies are so volatile at the moment. I don't know whether it's like trying to catch a falling knife.
Yeah, it's difficult because we had been very positive on the dollar, but we think that that's now got to a point where probably from a valuation perspective, it can't go much further. We've talked about the euro, and there's not a lot of positive drivers for that. Actually, the yen is probably one which is looking a little cheap at the moment, but again, that really is the falling knife today. And unless we start to see either a shift in stance from the Bank of Japan, more political pressure about rising prices, or perhaps an improvement in growth as a result of perhaps more inbound tourism, then the yen's not likely to rebound either. So currency is one where we're looking more at the commodity currencies, again, following on from that oil theme, things like the Canadian dollar, the Norwegian krona, the New Zealand dollar. We think they can perform well. But of the majors, we're sort of relatively neutral on most of them for the moment.
Okay, Kieran Ganesh, thank you very much. Indeed, the opportunities around the commodity currencies, investment-grade credit, and the value trade still has legs. That is the call from Kieran Ganesh from UBS. Thank you very much indeed.
Now, coming up, Credit Suisse, we continue following that story. State Street says it's not pursuing a takeover of Credit Suisse. We'll have more on that story. And the slump in the Tiger Cubs. Yes, it's also a sports story. That's coming up next. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Started by being a somewhat more hawkish outcome, and then the more I listened to President Lagarde, the more I realized that she was signaling this consequential change in the policy regime. This is a big deal, what went on in Europe, and I think the market reaction is indicative that the market is starting to understand that we've exited one regime and we've entered another regime.
Well, that was a Bloomberg opinion columnist, Mohamed El-Erian, reacting to yesterday's press conference by the ECB President, Christine Lagarde.
Okay, let's get to the latest when it comes to the banking sector then. State Street says it is not pursuing any acquisition or business combination with Credit Suisse. The denial comes a day after a Swiss blog reported on a possible bid for the Zurich-based bank. State Street says there is no basis to the rumours. Credit Suisse CEO Thomas Gottstein described a question about a possible takeover as, quote, stupid. Well, joining us now is Bloomberg's Tom Metcalf, someone who is very far from stupid. He's been following this story for us. Tom, what is your take then? Are you convinced by these denials from both State Street and Credit Suisse?
Yeah, what a week for Credit Suisse. I mean, yes, I think it was pretty sort of absolute from State Street. And to be honest, that was the kind of statement I maybe expected yesterday, because when their name was sort of mooted, it was a bit of a surprise to really everyone, the analysts and folk in the market. So I think they've come out as strong as they can. And what will be interesting today is to see, A, how Credit Suisse shares price react. Have they got further to fall? They obviously fell yesterday. And whether this saga is sort of just kind of be boxed off, or does it sort of open up the idea that, hey, people realise Credit Suisse is, you know, kind of a target, and perhaps other people, maybe more serious bidders, might come out.
So many questions on that, Tom. First of all, why did they wait 24 hours, State Street, when they saw the share price down, to come out with this?
Yeah, I suspect it's, you know, kind of being very cautious and prudent, and maybe just checking that there is, you know, across a big bank, there is no one sort of having those kind of conversations. You'd be surprised they weren't. But and I think that's the interesting thing. There's sometimes a lag between. It's not as easy as it sometimes should be for a bank to sort of definitively say something, because what you don't want to do is go out and say something definitive and then have to retract that. That's even worse than perhaps keeping the market sort of on tenterhooks for a while. But clearly, you know, I'm sure they were looking at their share price, which fell on the news, and thinking, wow, we better
I was looking at the share price.
Yeah, exactly.
6 Swissy 32, currently down almost 4%, 3.7% in the session for Credit Suisse. Does it, to some extent, this whole saga, the whole story around Credit Suisse and State Street, just open up that interest for others looking at it if they weren't already, particularly around the asset management part of business, which some, including yourself, when you've come to the analysis, have suggested that maybe that is the attractive component in this bank?
Yeah, look, I think that is the most likely thing. It seems very difficult for anyone to buy all of Credit Suisse. So much complexity, so difficult to absorb. But certainly there's loads of attractive parts of the business, so perhaps that's what people are going to consider. But it's certainly the messaging from Credit Suisse and out of Switzerland is, you know, we're not looking to do a deal or anything, we're focused internally. So very interesting to see how it develops. So as I say, any news like this, it kind of sort of resets everything, and who knows what will happen.
Hedge funds and tiger cubs actually really being stung by technology shares.
Yeah, absolutely. So, you know, the stars of the hedge fund world are now really struggling. So all the tiger cubs are basically down. I think the news yesterday was it Maverick Capital, I think, and Lone Pine, both down 30% so far this year. You know, you could add on that Chase Coleman, down more than 50%. Obviously, they're all largely quite tech-focused, so it is tracking how the Nasdaq's doing. But fascinating turnaround from, you know, probably the hottest hedge funds to try and get into to now, you know, gosh, doing terribly.
Yeah, not a hedge fund, of course, but Cathy Wood earlier in the week from ARC saying, look, inventories suggest that inflation is going to be short-lived. And, of course, you would imagine that those hedge funds will be betting on that as well if they still hold those positions. Thank you, Tom Metcalf, for breaking down what is happening across Credit Suisse. Of course, we have a redhead coming from the Ministry of Finance, the BOJ, the FSA, concerned about recent rapid yen decline. That is redhead across the turmoil. We know there's a lot of focus on Mr. Kuroda, of course, over the BOJ. That rate differential pressuring the Japanese currency, currently trading at 133. We had Jim O'Neill earlier in the week suggesting that if the BOJ or if the yen gets to 150, it could spark another financial crisis in Asia. That is a redhead across the terminal. Plenty more coming up. Stay with us. This is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. The Hawks seize control. Christine Lagarde lays the groundwork for the ECB's first rate hike in over a decade and signals more to come. Italian yields jump, but the euro tumbles. China inflation moderates as commodity prices cool and consumer demand weakens, leaving room for government stimulus. And next up is U.S. CPI, which is forecast to top 8% again. Mohamed El-Erian says there's still worse to come. So, Tom, if you look at the markets, inflation definitely always dominating the narrative.
It is indeed, and we're looking ahead, as we say in headlines, to that CPI print out of the United States, the Eurozone pivot, of course, in terms of the ECB, and opening the door to 50 basis points in September. Higher inflation, slower growth, that certainly sounds like stagflation, and then fragmentation risks, so the pressure on the peripheries not being put to bed by the commentary from Madame Lagarde because no new tools or structure was announced by the ECB to address potential blowout in yields. And we are seeing again, as we said in the headlines, a tick up, particularly in BTPs at the front end in yields, building on what we saw yesterday in terms of the sell-off of Italian debt. The benchmark European Stock 600 currently down by 1.3%. We've had pretty heavy losses in the US overnight, ending down more than 2%. The news out of China mixed in terms of softer inflation, which of course allows policymakers to step up stimulus and support for that economy, but at the same time, lockdowns for around 15 million people, at least temporary lockdowns in Shanghai around concerns about additional cases there. And just a reminder of the impacts there on that demand picture out of China. Iron ore, by the way, softer. That's playing into what we're seeing in basic resources. We'll have a look at that shortly across sectors. The DAX down 1.4%. The FTSE 100 here in the UK lower by 64 points, 7,411 on the FTSE 100, down 0.9%. Let's switch it on and see how things are playing out across the sectors then. Every single sector in the red this Friday morning, 30 minutes into your trading day. Top of the list is healthcare, 0.8% lower, something of a defensive play, of course, but still in the red. Bottom of the list, as I mentioned, basic resources, iron ore is lower. A question mark then about the demand out of China amid those additional lockdowns, lower by 1.7%. Real estate also off, as is construction. Every single sector in the red, but you're seeing losses of almost 2% down at the bottom for those three sectors. Right, let's get to the Bloomberg First Word News now with Alice Atkins. Alice.
Morning, Tom. US lawmakers investigating last year's riot at the Capitol on January the 6th have accused the then President Donald Trump of inciting his supporters and then rebuffing pleas to call off the mob. The panel opened public hearings with a primetime TV presentation. In video testimony, then Attorney General William Barr said some of the fraud claims that Trump pursued publicly were complete nonsense.
President Trump had told them that the election was stolen and that he was the rightful president. President Trump summoned the mob, assembled the mob, and lit the flame of this attack.
Ukraine's economy shrank 15.1% from a year earlier in the first quarter of this year, the first official reflection of the economic damage caused by Russia's invasion. Moscow now occupies a fifth of Ukrainian territory, and severe battles continue in the country's eastern provinces. In an interview with Bloomberg's Radio, Ukraine's finance minister Sergei Marchenko gave an estimate for the full-year drop in GDP.
I believe it could be in between around 30-35%. But again, war is going on, and there is no clear marks when it will finish, when we will win this war. That's why this estimation is very preliminary, and it depends on how this scenario of war invasion of Russia will devastate our economy.
Shanghai is to lock down 8 districts of the city this weekend to mass test millions of people as COVID cases continue to emerge. The move has triggered a renewed run on groceries in areas that only exited a 2-month shutdown at the beginning of this month. The restrictions will affect some 15 million residents in areas accounting for more than 60% of Shanghai's population. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Thank you so much, Alice. Alice Atkins there with the Bloomberg First Word News. Now, global food imports are expected to total $1.8 trillion this year, surpassing last year's all-time, mostly related to food prices. I think we're talking about all-time highs. That's according to a report from the United Nations Food and Agricultural Organization. Well, joining us now is Boubacar Ben Belhassan, Director at the UN Food and Agriculture Organization's Trade and Markets Division. So thank you so much for joining us. How much worse can this get? Sir, I think you might be, I don't know if you're on mute, but we can't 100% hear you. Maybe we'll take a short break, and then, there you go.
Me now? Sorry,
yes,
sorry.
We can hear you perfectly.
Thank you very much. Thank you very much. As you rightly said, and thank you for the invitation, and good morning. Yes, we predict, or we project that the food import bills, that's the cost for imports paid by countries, will reach in 2022 or exceed actually 1.8 trillion US dollars, and this is mostly due to prices. The increase compared to 2021 is 51 billion, out of which 49 billion are because of higher prices. Prices have been increasing since the mid of 2021, actually 2020. Since June 2020, we have been on an increasing path for prices for most of the food commodities, so which is posing a lot of challenges, especially, of course, for low-income food importing countries and for poor and vulnerable households who spend as much as 60 to 70% of their expenditures and their incomes on food.
Which factor, sir, is the most important, is having the most impact when it comes to these price rises? Is it transport? Is it shipping? Is it fertilizer costs? Is it what's happening in Ukraine? Which is the factor that stands out for you? Or is it a mix of all those things?
Well, it's a good question. It's a mix, as you said. It's a combination of factors. As I said, when you look back up to mid-2020, for one, there's a number of weather events that have affected production in a number of major exporting countries that, of course, had an impact on availability at the global market. Then transportation costs, with the energy prices increasing, we had increases in transportation costs, energy prices increases. That means higher prices for fertilizer, for inputs. So the freight rates are up. So when you put everything together, and of course, we don't forget that this has been faced by a strong demand. So we would continue to be a strong demand from the import side. So putting this together with the constraints from the cost of the supply side and then the demand side, prices have been increasing. Now that we have reached already a high price level for our FAO food price index, as you may know, we have this measure. It has already reached a very high level in February 2022, prior to the war. What happened after the war? Of course, with these two countries are very important players in global markets. With what happened in terms of uncertainty that created lack of availability and the reduction in exports, prices have jumped even further in March 2022, reaching actually an all-time high, a record high in March 2022.
Yeah, and that we've been talking about almost day in, day out, of course, on Bloomberg TV, because this economically could also be a disaster for some of the developing countries that really had to feed a long swathe of the population. If you look at animal fats, vegetable oils, and cereals, they make up for the biggest gain. How will that shift? Is there an easing on certain parts of food that will get better before the others?
Well, we are looking what we see now. Actually, it will. I mean, it will depend on a number of factors. What we see, as long as this is at least our analysis, as long as we have energy prices, crude oil prices continue on an increasing path, we are afraid that prices will stay elevated. They may go up, they may go down a little bit, they will stay elevated. Now, in terms of the different commodities, as you said, cereals are going up, and especially because of, again, the impact also that the war in Ukraine is having. These are two major exporting countries for wheat. Together they account for about 30% of global exports. For maize, about 18 to 20%. For sunflower oil, about 2/3, about 60 to 70% of global exports. So these are really, there's a lot of pressure there. So we are hoping that with the new crops coming in, this will depend on a number of factors. Again, that prices might ease, but what we are also seeing that are a lot of factors that are coming from the energy markets with spillover effects on the agricultural markets through higher costs of production, higher wages for the labor. So there's a lot of pressure we are still seeing on prices.
Yeah, here in the developed world, of course, the problem is the cost at the supermarket and on household budgets. In the less developed part of the world, lives are arguably at risk as a result of this. What is the appropriate policy response? How do governments need to be reacting to this to ease these prices and ensure that they have the imports that they need to address those concerns?
Yes, these countries actually, as we said before, those that will be, what we see will be the most affected are the low-income food importing countries that depend on food imports. They have low income. Unfortunately, with the rising prices, with the rising cost of imports, that's what we are seeing in the food import bill. The bulk or the majority of the increase is due to higher costs. So basically, we need a lot of support, and that's why in FAO we have proposed what we call the Food Importing Financing Facility. We need to support the balance of payment of these countries in order to be able to finance their imports, because otherwise we may see social unrest, we may see political instability, we may see consequences that can have even more severe impacts on food security. So of course, we need that's our call. We need really to assist this country in securing their imports, in facing this import costs through this import financing facility.
Yeah. But assist, so through money, but is there another way? Is it planting more crops, or is that a problem of timeline? Is there something else apart from giving money that we could do?
Now, what we can do, of course, now we are hoping also that with the market signals that we have a number of countries they have on the stocks level, because now the problem is as follows, right? The problem is a problem of access to food. It's not a problem of availability at the global level, but the distribution is the issue of distribution. So we hope that they will be released. For example, some countries, they have stocks. Some countries, they may release in order to move the food from where it's most needed. So in the short run, that's what we need to do. However, looking to next year, to the following year, and next year, that's our concern with the increasing in input prices. We can move from an access crisis, quote unquote, an access crisis this year to probably an availability crisis next year, because with the increasing production costs, with the lack of availability of fertilizer, higher fertilizer prices, then there will be less application of fertilizer, yields may drop, production may drop, and then we can actually face a problem of availability rather than access what we have this year. So we also urge government to avoid using export restriction, which can only exacerbate the situation. There is the issue of food loss and waste. There are many actions that can be taken
things that we could work on.
The problem.
Yeah. Thank you so much for joining us. Boubacar there, Ben Belhassan, Director of the UN Food and Agriculture Organization's Trade and Markets Division, with a really, really important conversation. Coming up, we'll dive deeper into the world of cybercrime with a new investigative book looking at a group of hackers thought to be working for North Korea. That's coming up next, and this is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, everyone. 45 minutes into European trading, and you can see European stocks actually extending some of the losses that we saw out there, bracing markets for that U.S. inflation data. That may help them decide what the Fed does next. And of course, what kind of inflation print we'll get will be significant in market mood a little bit later on, Tom.
Yeah, consumer price index print of above 8%, of course, is the expectation. So from inflation now, switching focus to cyber security. It has, of course, become an increasingly important priority for governments, businesses over the past couple of years. COVID lockdowns helped propel digitalization, of course, and those trends, and with it came an increase in high-profile cyber crimes, from Pegasus spyware and that scandal to allegations of Russian tampering. Now, researchers have uncovered the Lazarus Group. It's a shadowy cabal of hackers thought to be working on behalf of the North Korean state. Joining us now is Jeff White, author and investigative journalist who dug up deep into this group and his newly released book, The Lazarus Heist. Let me just hold it up for you there for our director. So this is The Lazarus Heist by Jeff White, and it is in fact titled From Hollywood to High Finance, and that is fascinating, the attacks on Hollywood. We'll get into that. Inside North Korea's global cyber war. Jeff, thank you very much for joining us. There's a number of amazing anecdotes throughout this book, and you follow the travails of the Lazarus Heist, as the Lazarus Group, as they go from heist to heist across the world. This is a global enterprise, essentially, allegedly coordinated out of North Korea. Something that really stood out for me in the first opening chapters, the coordination in India of a number of men and women who come, hundreds of them, into one city and pull money out of ATMs. Yeah. And the fact that they were controlling the ATMs, this hacking group, but also controlling men and women on the ground, the sophistication of this approach. Talk to us about how we got to that point and what it tells us about the abilities then of this group.
Well, the hack you're talking about is Cosmos Cooperative Bank, which was hacked back in August 2018. And as you say, it was a remarkable campaign, and the coordination of that campaign was absolutely astonishing. Not only did computer hackers break into the bank and manage to navigate their way to the ATM approval system, giving them control over the bank's ATM system, but they managed to coordinate money mules in 29 different countries around the world to go and withdraw money from cash points. And of course, because the hackers are inside the bank controlling the cash point software, they can then control the cash points. They can make the cash points spew out money. What's most astonishing about that is that you've got 29 different countries in which these money muling exercises were taking place. It was 2 hours and 13 minutes they managed to clean out $11 million. Absolutely astonishing. And what that means is the hackers who broke into the bank are in touch with people in 29 different countries who've got people out on the streets ready to go at a moment's notice to make those withdrawals from cash points. Absolutely astonishing.
And this is all apparently coordinated out of North Korea, the Hermit Kingdom. Yeah. I managed to visit with work. We reported in 2016. We got taken to a mobile phone shop, and they looked like knockoffs, and they had knockoffs of Angry Birds, but they had an intranet, not an internet. Yes, How was this coordinated out of a country like North Korea?
Well, this is the thing. I mean, the vast majority of people in North Korea, the 26 million citizens, do not have any access to the open internet. As you say, there's an intranet in North Korea. So some North Korean citizens who've got the money are able to go on the internet. You can find Kim Jong-un's speeches, Kim Jong-il's speeches, and so on. It's filled with that kind of stuff.
All the juicy stuff.
A very small minority of North Korea's elite have access to the open internet. The accusation is that the government has used its government hackers, and let's face it, most countries now do have government hackers. But the accusation is North Korea's hackers have been out getting cash in for the regime. As well, you'll know North Korea is subject to international sanctions, and what that's meant is the country's starved for money. The accusation is that North Korea's government hackers have been out topping up the government's coffers using cyber attacks.
Jeff, why did you focus in actually on North Korea? I mean, there are a number of operatives of countries that are not West-friendly that are trying to hack us every day.
Yeah. I mean, I have covered previously other cyber attacks from other countries, Russia notably. What's interesting about North Korea is, as I say, this interesting exercise where North Korea's government hackers are cash motivated is the accusation against them. What that's led to is North Korea's hackers getting into bed with not just organised cybercrime, but as the Cosmos example points to, street level crime. That's really interesting because you've got a confluence between nation-state hackers and organised crime. And I think that's a furrow that other nations and other nations' hackers are going to start ploughing.
But what's fascinating is they go from a relatively small bank in India, but coordinated, you say, on this huge scale, 29 different countries, to taking on Sony Pictures over the release of that very controversial film, The Interview. This was a grudge match between North Korea and Sony Pictures. How did that unfold? That is remarkable, the damage they did to that company.
Exactly, yeah. Back in 2014, Sony made a film called The Interview, which some of your viewers may have seen. The plot is a couple of bumbling journalists go to North Korea. They end up assassinating Kim Jong-un. That assassination is depicted. It is almost impossible to overstate how offensive North Korea would have found that. The Kim family is treated almost like gods in that country. North Korea found the film so offensive that the accusation is they hacked into Sony Pictures Entertainment and they annihilated that company from within. 6,000 computers had to be switched off. Sony's employees were using paper and pen for a period of time. They couldn't even send out fax from inside that company. So and then, just to complete this, they then leaked thousands and thousands of deeply embarrassing emails from inside Sony, eventually leading to the resignation of their co-chairperson, Amy Pascal. Astonishing campaign.
So are we getting smarter at stopping these attacks?
Generally, yes. There is more international collaboration. The problem with cybercrime is it runs across borders. I mean, going back to that Cosmos Bank example, India's investigators, the police in India, are now having to get cooperation from 29 different countries. They've got mutual legal assistance treaty requests in 29 different countries, potentially 29 different languages. So whilst the cooperation, the collaboration, defence is getting better, the challenge for these international campaigns for one country is still considerable.
Jeff, this is absolutely fascinating. We can ask a million more other questions, running short of time, but thank you very much for coming on. Jeff White, the author then of The Lazarus Heist, on the exploits of this group of alleged hackers out of North Korea and the challenges they pose to corporates and governments and individuals as well. Thank you very much indeed.
Now, from one investigation to another, today, Bloomberg's Big Take uncovers a story of massive chemical soil contamination in Belgium. We'll talk about the potentially criminal implications next. This is Bloomberg.
And behind me, you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. We are 54 minutes into the trading day. You can see a lot of the focus, of course, for the moment on the downside. We'll look at bonds also across Europe, Italian bond yields surging further. And then, of course, the big one today is US CPI. Now, on to some investigation by Bloomberg, and the fight over a tunnel project in Antwerp has revealed extraordinary levels of toxins in the water, soil, and people near the company's factory. This time, there could be a criminal charge. Well, Bloomberg's Big Take looks into the forever chemical crisis in Europe. And joining us now with this wonderful investigation is Stephanie Baker. Stephanie, what exactly did you uncover?
3M has a plant in Antwerp, one of its largest European production sites, in what is Europe's biggest chemical industry cluster. And they produced PFAS chemicals, so-called forever chemicals, there since the 70s. Now, there was a plan by the government to build a $5 billion tunnel highway project, and the tunnel was supposed to pop out right next to 3M's plant. And environmentalists scrutinizing this project, worried about the soil being displaced, uncovered last year the extent of the contamination, which had really gone unnoticed and had been hidden, in fact, by the government doing a secret deal with 3M to dump the most toxic of the polluted soil on 3M's site that had been planned to be displaced by this tunnel highway project. In the meantime, they discovered that they did testing on local residents and discovered that the vast majority of them had above the safe limits of PFOS, this one particular type of forever chemical, in their bloodstream. And it's turned into a real political scandal in Belgium, and parliamentary commission and criminal charges and various civil complaints against the company.
Stephanie, thank you so much. It's a great read, and we urge everyone, of course, to go and read it either on our website or on the Bloomberg terminal. Stephanie Baker, and if you'd like to read it, just type NI Big Take on the Bloomberg terminal.
That is it for the European markets. Open surveillance is up next. The markets here in Europe currently lower by 1.2%, and Italian yields blowing out. This is Bloomberg.
When you think space, you probably think One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
We expect to raise the key ECB interest rates again in September.
I think those who boldly said inflation has peaked and is coming down may have to change their minds.
If the medium-term inflation outlook persists or deteriorates, a larger increment will be appropriate at our September meeting.
We're prepared for a substantial economic slowdown towards the end of this year and into next year.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The Hawks seize control. Christine Lagarde lays the groundwork for the ECB's first rate hike in over a decade and signals more to come. Italian yields jump, but the euro tumbles. China inflation actually moderates as commodity prices cool and consumer demand weakens, leaving room for government stimulus. And next up, of course, is U.S. CPI, which is forecast to top 8% again. Mohamed El-Erian says there's still worse to come. Treasury Secretary Janet Yellen says there's nothing to suggest a recession is in the works. Now, first thing is first, let's check in on the markets. And what the markets are looking at is, of course, all of these inflation figures, ones we've had and the ones that are coming. Now, a little bit of pressure on these European stocks, 600. Again, trader anxiousness out there that monetary policy will be too aggressive in dealing with inflation and therefore hurt growth. You're seeing European stocks down 1.2%. Extremely interesting to see also how markets and traders are reacting to the ECB hawkishness yesterday. Not that much movement on euro, and then S&P 500 futures pretty much flat. Now, this is where the action is happening. I think there was an interview with Mr. Horbin over in France with the French central bank governor, and he was very clear. He said, look, the ECB has the tools and will deal with fragmentation, even if it's something that Madame Lagarde did not explicitly say yesterday. That 10-year yield in Italy, 3.66, and the German bond, 1.42 for the yield. Now, if you look at the European map, it's not really a tale of two stories, because most of them are actually in the red, with the FTSE, the CAC, and over the DAX down between 0.9 and 1.5%. Maybe, just maybe, we'll get a bit of solace when we get that inflation print from the U.S. a little bit later on. Now, the ECB has brought down the curtain on years of ultra-loose monetary policy. Policy officials committed to a quarter-point rate hike next month and signaled a bigger one to come in the autumn, as fresh forecasts showed a faster pace ahead of prices than earlier thought. Now, President Christine Lagarde defended policymakers who got it so wrong on inflation.
All international institutions, all forecasters of repute have actually made the same mistake of underestimating or not anticipating some of the developments, such as the war, such as the energy crisis.
Now, for more, we're joined by our Maria Tadeo in Brussels. So, Maria, we've learned a lot more on the ECB's policy path than expected. What exactly are traders not convinced about?
Look, Francine, I think more than the rate path, because she was very clear and calibrated it very well. We're going into July with 25 basis points. She was asked, why not do it now? And she repeated, well, this is all about the forward guidance. We want to be very clear and very transparent. So on that front, I think it was very clear. The fact that she didn't push back on the 50 basis points in September, too, I think also gave good guidance in terms of what's to come. But it was really about the fragmentation. And Francine, yesterday in Amsterdam, you and I talked about this. There was a lot of anxiousness in the market going into the meeting that Christine Lagarde had to really address this issue head on. Fragmentation, can the ECB really provide some buffer, and not just an abstract concept, but actually show there's a tool in the works. And yesterday, I counted the times she was asked 4 times repeatedly, fragmentation, repeated each time. We'll deal with it. We've done it in the past. We'll do it in the future. But there was no substance to it. And I think in many ways, that is exactly what freaked out markets, particularly when you looked at the BTP move right after that decision, the lack of detail around it.
Yeah, so this is a win for the hawks.
It is, Francine, in many ways, and we talked about it too yesterday. We were in Amsterdam, and it really did feel the setting also. A central bank that had been very hawkish on the inflation print. A central banker had spoken about the need of really tackling this issue head on, and yesterday she was accompanied, of course, by the Dutch central banker, and it did feel like this is the start of something new for the European Central Bank. I'm not sure whether we should say the hawks will be in command for the foreseeable future, and that is the end of it for Christine Lagarde's term, but I do think that there was really a change of the language, there was a change in the dynamics there, and it was really in many ways the end of that era. You know, it's now very clear that we're in for liftoff, and of course a lot of questions around the volatility that it could trigger in the bond market, also exacerbated by the fact, again, going back to the fragmentation question, that yesterday there wasn't a lot of substance around what will the ECB do if the spillover from this actually becomes a problem, particularly across the periphery.
Yeah, and Maria, of course, you know, we'll see how that plays out also in terms of fragmentation, or certainly whether markets continue pushing the ECB for more concrete answers on how they would deal with fragmentation. Thank you so much, Maria Tadeo there, covering the ECB for us. Now, we're also joined by Annika Trion, Managing Director at Van Lanschot Kempen. Annika, thank you for joining us. I mean, so many questions actually on how much the markets will test the ECB's resolve right now.
Yeah, hi, good morning, Francine. So I absolutely agree with what was earlier said. So, you know, regarding the ECB statement, we all anticipated a 25 basis points hike. I think the two things that stood out, first of all, it's simply the ECB taking a leaf out of the Fed's book in terms of really starting to provide visibility in terms of the road ahead. And the second point, all about fragmentation. I think that was probably one of the larger disappointment areas. What new tools in the toolbox does the ECB have to prevent a resurgence of this, you know, European sovereign crisis, which we suffered from after the, you know, global financial crisis?
So, Annika, do you think the markets actually will test them in the next couple of days to have, I guess, that question answered concretely with some steps?
Absolutely. I think you already saw the first tests already start taking place yesterday, immediately after the announcement. Looking at the spreads between Italian 10 years, German 10 years, we're almost approaching the 250 basis points of 2020 when the ECB was forced to start moving aggressively. So absolutely.
There was an interesting blog post actually by Mattis Muller, ECB Governing Council member, saying that hesitation when it comes to dealing with inflation makes the job a lot more difficult. We used to worry about a policy mistake, so that they would hike too much and then they'd have to reverse it possibly in 2024 or even quicker. Are we thinking about things wrong?
Yeah, I mean, it's in a way, I think you could actually think of how the ECB is behaving, and the fact that, you know, Europe is essentially a quarter or so behind the curve versus the US. And, you know, you saw the big sort of aha moment that we got it wrong, transitory is wrong. Then there was the fear that actually central banks are going to be far too hawkish. And I think now we're sort of in total discovery mode. You know, ultimately, when it boils down to the real economy, it's all about the fact that consumer confidence actually across the globe is shockingly low. I mean, it's back at sort of, again, the global financial crisis level, which is remarkable, because in that period, we saw jobs losses of hundreds of thousands of jobs being lost on a monthly basis, at least in the US, Right now, it's the exact opposite. It's hundreds of thousands of jobs being created. So despite such a strong labor market, despite such a strong equity value of people's households, confidence is very, very low. That's all because of inflation. Despite confidence being very low, consumer spending is actually held up very strongly because people are essentially eating into their pent-up savings. And at a certain point, that has to stop. It's not sustainable. And that's why it's all about inflation. And that's why it's all about how are central banks going to be proactive enough, yet not too aggressive, to achieve its goals.
So what does that mean for investment strategy? Where should we look for opportunities?
Yeah, I mean, it's right now the big question is, talking about the PEs and talking about the E's. So we've all seen a huge multiple derating of 2 to 3 to even 4 PE points on stocks. The E has actually held, well, the earnings estimates by analysts have actually held up remarkably strong. Much stronger than people would have expected. So it's either a function of, well, actually earnings are going to hold up stronger because companies haven't shown alarming signs yet, or analysts simply being too conservative and rather slow in making those cuts. If you believe in the latter, then you could argue that, well, actually, we've not seen as much multiple derating as we could, so there's more to go. If you believe in the former, you could sort of start, delving into the E's. In terms of asset allocation, what that means and what that results in is being very, very fundamental, really zoning into those earnings and looking at what are the realistic estimates and what is the realistic multiple to put on that, and are there any specific opportunities?
And Annika, I guess, following on from that, so there's a lot of homework that people have to go and do to figure that out, is how do you deal with dwindling liquidity in the markets?
Yeah, so that's such an important phenomenon, and it's something we don't have enough track record in, because we've never actually experienced a long QT period. We had the 2018 and 19, but that was very, very brief. And ultimately, if we've been enjoying 10 years of a liquidity pump into the markets that have had all sorts of obvious effects, but also ripple effects, and that being weaned away, I mean, it's starting in the US, it hasn't even started in Europe yet. What does that mean? And to your point about the homework, you certainly can't hope to free ride anymore. It's a lot more work if that support factor is gone.
Annika, thanks so much. Annika Trion there from Van Lanschot Kempen staying with us. Now, coming up, just days after Shanghai celebrates its reopening after 2 months of brutal lockdown, millions are sent back to their homes after the return of COVID to the city. That story is up next, and this is Bloomberg.
Stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We're seeing a healthy level of resilience and recovery in markets like Hong Kong, who are one of the later countries, obviously, or markets to come out of the pandemic. Obviously, seeing severe disruptions in China, but encouraged that economic activity in China, despite the lockdowns in Shanghai and elsewhere, economic activity remains pretty strong.
Standard Chartered Chief Executive Officer there, Bill Winters, showing his confidence in China despite its zero COVID policy. Now, just days after the city was reopened, China is once again locking down millions of people in Shanghai. That's after daily cases jumped to 6 on Thursday. Several districts will be closed for the weekend to allow for mass testing. Well, Annika Trion from Van Lanschot Kempen is still with us. So, Annika, how do you play China right now?
Yep, China has been such a basket case actually since early 2017 because it started off with a hit on the real estate sector. After that, there was a much more stringent approach to local tech, but also global tech, which raised a lot of governance question marks in the region. And obviously the zero tolerance policy alongside an enormous new wave of COVID and also deaths makes it very, very complicated. And I think, the ultimate factor people are looking at is to really understand what kind of monetary support can be provided there to cushion some of the demand weakness that we see as a result of it.
So do you think that they'll be able to keep a handle on it through monetary policy, through government support?
Well, what's interesting is you do see that they are certainly pledging regarding making monetary policy moves, but we haven't really seen anything tangible yet. And it's been much more on the fiscal stimulus side. But that's certainly something which people are going to be paying a lot of attention to, especially given yet another negative surprise regarding Shanghai.
Yeah, at the same time, we had news this week over, for example, then easing some of the restrictions with gaming and things like that. So does it go hand in hand?
Absolutely. I think ultimately, from a governance perspective, the more sort of credibility, the more comfort that investors can see from investing in a governance climate in China, that's key. And next to that, really understanding to what extent can demand be cushioned amongst, persisting uncertainty around the COVID waves. And I think the point is, it's not just about asset allocators investing in China per se. It's about the read-through, which is global, which is the fact that we've always relied on China being a global pillar in terms of economic growth. Also, what that means on commodities, on metals, where China demand has always been an enormous driver of certain metal pricing.
Annika, thank you so much. Annika Trion, their managing director at Van Lanschot Kempen. Now, let's get straight to the Bloomberg First Word News. Here's Alice Atkins. Hi, Alice.
Hi, Francine. U.S. lawmakers investigating last year's riot at the Capitol on January the 6th have accused the then President Donald Trump of inciting his supporters and then rebuffing pleas to call off the mob. The panel opened public hearings with a primetime TV presentation. In video testimony, then Attorney General William Barr said some of the fraud claims that Trump pursued were publicly completely nonsense.
President Trump had told them that the election was stolen and that he was the rightful president. President Trump summoned the mob, assembled the mob, and lit the flame of this attack.
Outgoing Hong Kong Chief Executive Carrie Lam says the city can't function as a global financial hub if quarantine controls remain in place. The city still imposes a mandatory 7-day hotel quarantine on international arrivals, despite business groups' call for it to end. Hong Kong's border with mainland China has been closed for more than 2 years. A report has found the UK spent £4 billion on unusable personal protective equipment during the pandemic and now plans to burn significant volumes of it. Parliament's Public Accounts Committee says millions of items of kit didn't meet official standards. It says the government lost 3/4 of all money spent on PPE in the first year of COVID due to inflated prices and faulty kit. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Alice. Now, coming up, could 3M be about to face criminal charges in Belgium? The U.S. chemicals giant is accused of polluting land in Antwerp. That's the subject of today's Bloomberg Big Take. We'll have more on that story next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the fight over a tunnel project in Antwerp has revealed extraordinary levels of toxins in the water, soil, and people near the company's factory. This time, there could be criminal charges. Bloomberg's Big Take looks into the forever chemicals crisis in Europe. Well, joining us now is Bloomberg's Stephanie Baker, who broke the story, who's investigated the story right from the beginning. So, Stephanie, 3M is now being investigated for illegally dumping waste. How did this come out?
Right. So they have produced, 3M has produced so-called forever chemicals in Antwerp since the mid-'70s. And at the same time, there had been this long-running plan to build a major tunnel highway project right there to close Antwerp's ring road. And the tunnel would pop out right next to 3M's plant. And in the process of building this tunnel, a huge amount of soil would be displaced. So scrutiny of that plan to dump some of the soil in different parts of the Antwerp province led environmentalists to uncover the extent of the contamination What came out was the fact that 3M had struck a secret agreement with the state-owned highway company to build this massive wall of toxic soil on 3M's site. In the process, they tested local residents and realized that the vast majority of them have levels of this forever chemical called PFOS in their bloodstream above European safety limits. And it's caused a political scandal in Belgium, a parliamentary commission. There's a criminal probe, and there are various civil complaints underway. And it's a series of legal challenges that suspended the construction of this $5 billion tunnel highway project.
So you spoke, Stephanie, to residents who tested for very high levels of PFAS. How worried are they?
Yeah, I think they are really worried. I mean, some have ignored it, but those people that live close to the 3M plant are very worried. And I think there's a level of anxiety and concern about their own health, about how the government is handling it, and how they might be compensated for both the loss of value to their home. House values have gone down in that area, as well as their own health problems. And PFOS is associated with a number of health conditions, including hormone and immune deficiencies, high cholesterol, diabetes, weakened vaccine efficacy. So I think there's a lot of anxiety in the local community about the future.
So, Stephanie, what does this mean for 3M longer term?
Right. So 3M has committed already almost 300 million euros to clean up the area, both the groundwater and the initial zones that have been contaminated. But it looks like they're facing a much bigger price tag to fix this problem long term. They are being ordered by the government to draw up plans to remediate the residents who live in the vicinity of the factory, and that plan entails scraping off huge amounts of dirt around people's homes in order to clean up the area. And I think the final price tag remains up in the air at this point until they draw up a full cleanup plan and document the extent of the contamination.
Stephanie, thank you so much, as always. Some truly great investigative journalism. Stephanie Baker there. And if you'd like to read Stephanie's piece, just type NI Big Take on your Bloomberg terminal. Coming up, it's all about inflation. We'll get the latest on price pressures in Europe, the US, and China, and also the UK. More on that next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The Hawks seize control. Christine Lagarde lays the groundwork for the ECB's first rate hike in over a decade and signals more to come. Italian yields jump, but the euro tumbles. China inflation moderates as commodity prices cool and consumer demand weakens, leaving room for government stimulus. And next up is U.S. CPI, which is forecast to top 8% again. Mohamed El-Erian says there's still worse to come, while Treasury Secretary Janet Yellen says there's nothing to suggest a recession is in the works. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, European stocks extending losses this morning as inflation fears grip the markets once again. We have reporters around the world on the latest price pressures. Covering the ECB is our Europe correspondent, Maria Tadeo. Our chief Asia economics correspondent has the latest on China and the U.S., and our EMEA EcoGov correspondent, Lizzie Burden, has the details on the UK. So first, let's go to China. Data this morning showed inflation moderating in May. A cooling in global commodity prices and weaker consumer demand is giving the government more room to ease policy and add stimulus to shore up the economy. And what were the key takeaways from those inflation figures?
A pretty soft inflation read in China, Francine, at 2.1% on the consumer side of things, even though prices for fresh fruit and veg did skyrocket. That was offset by a big 20-odd% fall in prices for pork, for example. And then, of course, we know the broader consumer story is one of being quite cautious and subdued due to the ongoing aggressive COVID lockdown. So the end result was consumer inflation came in 2.1%, not going to unsettle anybody. On the producer price side of things, that came in at 6.4%. Also a cooling, reflecting a base effect from a year ago and the fact that commodity prices have come off a little bit. So taken all together, it means that, if anything, China could become a source of disinflation for the world economy as opposed to a source of inflation. And there's certainly nothing stopping policymakers now from putting extra money into the economy to support demand.
Yeah, and then, of course, we have the big one, U.S. inflation. We see that pace, steady, but it's still 8.5% or around there. I mean, it's huge, a huge figure.
Yeah, exactly, Francine. The number tonight is expected to kind of reinforce that U.S. inflation may have peaked. There are some signs from some of the core indicators that U.S. inflation may have peaked. But as you say, it's still going to come in somewhere around 8.3%. That's not very far from the peak of 8.5% back in March. And it will only add to the debate that the Fed still has to keep jacking up interest rates, maybe by another 50 this month and next month, because even if it is peaking, inflation around 8% is still a long way from where the Fed wants it at 2%. So the Fed debate will remain live for many months, despite today's reading, I think.
All right, thank you so much, Enda Kern there. Let's also move on to the UK. The Bank of England survey on inflation expectations dropping, I think, just moments ago. Lizzie, if you look at what we know, so UK inflation expectations rise to 4.6% in May. How does that factor into what the BOE will do?
Well, it shows that you've got these second round effects in the UK, people losing faith in the Bank of England to do its job and control inflation. Of course, you had all that criticism from ministers recently about just that. This will be watched closely by officials in terms of the decision on Thursday. Bloomberg Economics is expecting a 25 basis point hike to 1.25%. Then you'll get 3 more hikes before the end of the year. Markets a little bit more hawkish. They see a 50 basis point hike somewhere in there. But the rhetoric rhetoric is going to be more hawkish this time than last meeting, because of course you had that £15 billion fiscal support package since Rishi Sunak, since the last decision.
So is this really a template of what the rest of the world is living through?
Well, it's different in the UK because of what I'm just saying about the inflation expectations. You've got more second round effects here, people compensating for inflation by asking for wage rises, and our inflation picture's less tied directly to the global commodity price growth than in other countries. Those were the warnings we had yesterday. But the decision is more likely to be a split between 25 basis points and 50 basis points in the UK rather than between to hike or not to hike.
Lizzie, thanks so much. Lizzie Burden there with the very latest on the UK. Now, the ECB has brought down the curtain on years of ultra-loose monetary policy. Policy officials committed to a quarter-point rate hike next month, signaling a bigger one to come in the autumn, as fresh forecasts showed a faster pace ahead for prices than earlier thought. Well, President Christine Lagarde defended policymakers who got it so wrong on inflation.
All international institutions, all forecasters of repute have actually made the same mistake of underestimating or not anticipating some of the developments, such as the war, such as the energy crisis.
There you go. Inflation. Wrap. That is Enda Kern and Lizzie Burden. We'll have plenty more, of course, on inflation. Also, coming up, not the man for the job. That was one of the comments that Aviva chief executive Amanda Blank faced at the insurer's AGM last month. We're joined next by Mary Ann Seagard to discuss why women may still struggle to be taken seriously in their professional careers. This is Bloomberg.
win for consumers worldwide that Apple is now embracing a better form of consumer credit. We're looking at an industry of retail banking payments that, has an addressable market of $440 billion worldwide. And it has been constructed in a way traditionally where credit cards have been making a fortune by trying to get us to revolve at high interest rates once we get that credit card statement every month. And this form of credit is better for consumers. So I think it's fantastic. And Klarna has been offering this form of credit for a while. I actually would be mostly worried if I was one of those credit card banks who embraced Apple Pay, was so happy to embrace this new technology, and now suddenly find myself having this company in front of my credit card promoting an interest-free credit instead of my 40% revolving credit one, and then pushing that customer to another provider. That to me should be the big headline of this news. For us, I mean, Klarna has 150 million users worldwide. We're one of the largest third-party global payment networks in the world. Pay in 4 is a fantastic product. It has done tremendously well for us in the US and helped us a lot to gain recognition and so forth. But people are using us for a lot of reasons. One, not the least, being the fact that we're the richest data payments networks in the world because we have SKU level data and digital receipts on every transaction, allowing us to create a much richer consumer experience. 40% of our transactions are debit, not even credit. People don't know that, and so forth. So I mean, I'm welcoming it. I always think competition is nice, and I'm also fortunate to have a neighbor here in Daniel Ek, the founder of Spotify, who can give me some tips on how to compete with Apple successfully, obviously, over the year.
Well, that was the Klarna Chief Executive Officer Sebastian Szymatowski speaking to Bloomberg last night. Now let's get straight to your Bloomberg Business Flash. Here's Alice Atkins. Hi, Alice.
Hi, Francine. State Street says it is not pursuing any acquisition or business combination with Credit Suisse. The denial comes a day after a Swiss blog reported on a possible bid for the Zurich-based bank. State Street says there is no basis to the rumours. The CEO of Credit Suisse called a question about a possible takeover, quote, stupid. Brazil is set to give up its controlling stake in power utility Eletrobras through a share sale that could raise $7 billion. The Rio-based company, Latin America's biggest power supplier, is issuing new shares, while National Development Bank BNDES is selling part of its holdings. The government is expected to use the proceeds to finance subsidies and other relief measures ahead of October's election. Stanley Druckenmiller is warning Wall Street that the sharp decline in the stock market isn't over just yet. The chairman and CIO of Duquesne Family Office told the Sohn Investment Conference that his best guess is that we're 6 months into a bear market. He says it's, quote, highly probable that the bear market has a way to run. Outgoing Hong Kong Chief Executive Carrie Lam says the city can't function as a global financial hub if quarantine controls remain in place. The city still imposes a mandatory 7-day hotel quarantine on international arrivals, despite business groups' call for it to end. Hong Kong's border with mainland China has been closed for more than 2 years. And that's your Bloomberg Business Flash. Francine?
Thank you so much, Alice. Now, Aviva Chief Executive Amanda Blank said that the amount of sexism she encounters at work has worsened as she has risen through the ranks of finance. Blank has been actively speaking out following the insurer's AGM last month, where one shareholder suggested she was not the man for the job. Well, we're now joined by Marianne Seagard, author of The Authority Gap. Through data research and interviews with the likes of Hillary Clinton and Sherry Blair, Marianne reveals that the scale of the gap that still persists between men and women. Well, she joins us now. Marianne, thank you for joining us. Is the gap getting worse or better?
I don't think it's necessarily getting worse, though there is a real backlash against women speaking out online. I think it's probably very slowly getting better, but I'd just like to hurry it up. We are getting more women in senior positions, which is fantastic, but as Amanda Blank revealed, they still get subject to very sexist comments and quite a lot of misogynistic behaviour. And I just think it's time to call this out and do something about it.
Marianne, does calling it out actually makes a difference to the way these women can conduct their jobs, or how do you see the parallels in this?
Well, I think that a lot of men actually do it unconsciously. They don't do it deliberately. And I'm giving them the benefit of the doubt. Some of them do it deliberately, but a lot of them do it unconsciously. So, for instance, they will just take up disproportionate speaking time in a meeting, or they will interrupt women much more than they will interrupt men. And as I say, they're not doing it consciously, but I think that if we start to help them become more aware of this sort of behaviour, they might genuinely want to change it.
Marianne, I feel like we've been talking about this for the last 10 years, and certainly even Sheryl Sandberg was talking about this in Lean In. Are things getting better as a lot of private companies give, if not mentoring, certainly give bias awareness, or what's the right way to deal with it then?
Well, unconscious bias training does help to raise awareness, but it doesn't actually change your behaviour unless you really undertake to do so. It's a bit like going to a lecture about how much carbs and fat intake will affect your weight. Won't actually help you lose weight unless you do something about it. And And I think the trouble is with things like Lean In, what they were effectively saying was the problem lies with women and that women need to be more confident, more assertive, and to lean in. What I'm saying is that it's not women we need to fix. It's how we all perceive and react to and interact with women that needs to change. Because actually, if women just lean in and act as confidently and as assertively as men, they often get punished for it. People start to use adjectives about them like abrasive or strident or aggressive or bossy, you know, all these adjectives that are never used of men showing exactly the same character traits. And that's because we still nurture these incredibly old-fashioned and outdated stereotypes somewhere in the darker recesses of our brains that tell us that women ought to be warm and kind and gentle and unassertive and unthreatening. As soon as they start to behave in the way that they have to behave in order to be taken seriously, that makes us feel really uncomfortable.
How do you counteract this? So, you know, they're gender neutral, for example, toys. We've been talking about this for such a long time. And again, we were talking about, of course, the chairwoman who said, well, she's not the right man for the job. I mean, the person who said that was shamed on social media.
Yeah, and so that helps, I think. I think how we counteract it is just being more aware of our behaviour. So, for instance, if we see a woman in authority, or indeed a woman running for office, and we say, oh, they're really not likeable, we should question ourselves and ask, is it she who isn't unlikable, or is it my reaction to her that's making me think that she's unlikable? And if these adjectives like, you know, abrasive and strident and aggressive and bossy start cropping up in our brains, we can think, that's my unconscious bias talking. It's not actually the woman concerned who is those things. We just need to be much more aware unconscious bias manifests itself in our own thoughts and behaviour.
So, Marianne, do you think this is a particularly British problem, or are you really seeing this worldwide?
It's absolutely universal. And you know, I talk to women from all over the world. And of course, in countries such as Pakistan or Saudi Arabia, the sexism is overt. It's not even covert. But in the Western world, in the UK and the US, even in Scandinavian countries, which are probably more egalitarian than ours, we still see this sort of behaviour happening. Men monopolising conversational time, men interrupting women, men underestimating women and challenging their expertise and resisting their authority. It happens all over the world to a greater or lesser degree, but nonetheless it's everywhere, I'm afraid.
So, Marianne, let's say you're in a board meeting, there are, 5 men, 5 women, the men talk over the women. Who should intervene? Like, you know, if we game theory that, what's the right way to deal with it?
Okay, so the ideal thing is that the chair of the meeting intervenes and says, hang on a minute, I was really interested in what Marianne was saying there. Or suppose I make a point and no one takes any notice and a man makes exactly the same point 10 minutes later and it's treated like the second coming. I mean, this is a very common phenomenon. You know, the chair should say, oh, I'm so pleased you agree with what Marianne said earlier. If the chair's not doing it, ideally someone else around the table will do it. Because, of course, if a woman speaks up and says, hang on a minute, I said that 10 minutes ago, or stop interrupting me, you know, please let me finish, quite often she then gets characterised as difficult or spiky or oversensitive. So what we really need is allies around the table, male or female.
Marianne, thank you so much. Marianne Seaguard, the author of The Authority Gap, joining us this morning. Now, coming up, the BTP Bund spread hits the wildest since May 2020. We talk all things European bonds with Ven Ram from our Markets Live team. That's coming up next, and this is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I have no reason to have a different forecast from the consensus of 0.5 and 0.7 month on month. But what worries me, John, and you're not going to like this because it's looking forward, the June month-on-month print will be worse than the May month-on-month print. I think those who boldly said inflation has peaked and is coming down may have to change their minds. I wouldn't surprise me if we see a headline print that's much higher than the 8.5.
Next month, Mohammed, why?
Not as early as next month, because first, the drivers of inflation are broadening, and that's due to the Fed policy mistake. Secondly, at the headline level, energy prices are going up month on month quite dramatically. And thirdly, we're seeing pressure on shelter and food. So if you look at all the components, it's way too early, unfortunately, to say that inflation has peaked. I hope it has, but it would not surprise me if we go above 8.5% on a yearly basis.
Hey, Mohammed, this is really important. I remember when you gave me the call early last year, and you said, I don't think this is transitory. This is important. I'm pushing back. And you went out there in force, and that force got more powerful as the year progressed. I get the feeling this year, Mohammed, that we still haven't totally relinquished this idea that a lot of this is temporary. I hear from a lot of guests who think that we've seen the peak, a mechanical peak year over year, and for good reason, and they think the Fed backs away in September. Are you stressing this is going to persist through the whole of this year, that we're not going to get that drop-off that so many people are hoping for, looking for?
John, if we get a drop-off, we'll get it for the wrong reason. We'll get it because of demand destruction, and that would be tragic. The last thing we need is for inflation to completely undermine the demand side, because then we have not only a price issue, but we have an income issue. And once again, it will be the most vulnerable segments of the population that get hit the hardest. So in a way, be careful what you wish for. So if you believe the labor market stays strong, wages remain buoyant and start catching up to inflation, then it's very hard to see inflation coming down. If, however, you think that we're going to have a recession, sure, inflation is going to come down, but that's not the sort of transitory inflation that anybody wants.
Bloomberg opinion columnist Mohammed El-Erian there giving his take on the ECB President Christine Lagarde's press conference and his outlook for inflation in Europe and America. Now, economists are expecting U.S. inflation figures to show persistent price increases at over 8%, but Treasury Secretary Janet Yellen said that while there's a risk of higher food and energy prices, there's also nothing to suggest a recession is in the works. While our MLive editor, Ven Ram, agrees if U.S. yields are on the right track. While our MLive editor, Ven Ram, joins us. Ven, first of all, you really pulled at my heartstrings today because you were talking about Italian BTPs, periphery bonds, and espressos. So 100% support you in anything that has to do with espressos. What is your main worry? That we look at treasuries or that we actually misprice some of the periphery bonds?
Well, I don't think there's any mispricing in peripheral bonds. Yesterday, as the ECB came out, they changed the guidance was such that it paved the door open for a 50 basis point move in September. And that kind of meant that the market had to rework the ECB calculus. And now, after the ECB, they were pricing 150 basis points of tightening in the remainder of the year, as opposed to 125 for the ECB. And that meant that bonds had to reprice. And that's what we saw yesterday. If you look at it today, the bonds have come off a bit and the yields have come off a bit. And that kind of supports the argument that it was more like a one-day move. We are nowhere near a risk of fragmentation yet. But if the moves get disorderly over a period of time, that's when the ECB is more likely to be concerned.
But and we're hearing, I'm counting like 4 or 5 ECB Governing Council members giving interviews today on the back of that ECB decision. The French governor is saying that actually the markets should have no doubt that the ECB will combat, of course, fragmentation and has the will and the means to do it. Do you agree, or do you think that the markets will try and push to get an answer what that looks like?
The markets will eventually try to push the ECB to see what their tolerance limit is. But I don't think with them not having even raised rates, even for a first time, that's a prospect just yet. Down the line, it's going to be an issue, definitely, because the ECB, if they start raising rates, the deposit rates beyond 1% territory, I think that's when peripheral yields will blow out. And at that point, the ECB will be forced to reveal its backstop, because these southern European economies are indebted to the gills, and that has to be priced into the market if bond yields are going to go higher. And so it is going to be an ongoing conversation in the coming months, but not just yet, I believe.
So then on the U.S., what do you think yields are really telling us about a U.S. recession?
I don't think we are on the cusp of a U.S. recession anytime soon, not for the next 12, 14 months at any rate. Yes, we did have an inversion in the 2-stance curve, but historically, if you go back, what you see is that what has proved to be a watertight signal is an inversion not only of one segment of the curve, but multiple segments of the curve. And a key segment of the curve that's got to invert is the 3-month 10-year. In the absence of an inversion of both those segments of the curve, it's more likely to prove to be a false alarm, as has happened before in 1998 when the 2-year 10-year inverted without the 3-month 10-year inverting within a few months. So if you pull all that together, what you get is that a recession is extremely unlikely before the second half of next year.
Thank you so much, Ven. Smart on bonds as always, and then we look at U.S. inflation. More Bloomberg Surveillance Early Edition next.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think you could see a bear market rally.
There's not a lot of inventory in the system, so that's why we think it's a little recession.
Still, the Federal Reserve moving a lot quicker. The US has a much larger inflation problem.
There's a very narrow path between an inflation problem or a growth problem.
It's way too early, unfortunately, to say that inflation has peaked. I hope it has, but it would not surprise me if we go above 8.5%.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, June 10th. Our top stories today. Mohamed El-Erian says U.S. inflation hasn't peaked. We'll see if he's right with today's CPI report, which is forecast to top 8% once again. China's moderating inflation is set to give policymakers more room for easing. Meanwhile, Shanghai prepares to lock down 7 districts this weekend to conduct more COVID testing. And a House panel investigating the January 6th insurrection opened public hearings with a primetime TV presentation. We've got the latest on the findings about the Capitol riots. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, it feels like it's been a big week. There's a lot going on here in the markets post the ECB. We heard from China around inflation, and we hear from the US on inflation later today.
Yeah, it's been a big week, Anna, but it is not over yet. We still have US inflation data to get through and the entire session that follows. So really interested to see what that read is on CPI in about 3.5 hours time, 8:30 a.m. Eastern. Now, of course, the Asia session already closed for the week before we got that inflation data. It was a bit mixed. You had stocks down in Japan, but higher in China and Hong Kong. Now, the good news in part in China is on the inflation data out overnight. Only 6.4% on producer price inflation. I say only, but that is down from the month of April. So that is a sign that they can continue to ease policy and boost stimulus. So you have the CSI 300 up about 1.5%, even in spite of news that Shanghai is going back into lockdown this weekend to conduct mass testing. Of course, the other thing investors in China and Chinese technology stocks in particular are weighing is the regulatory crackdown. We did have some cold water thrown on that whole idea of an anti-IPO revival yesterday. Nonetheless, though, the Hang Seng Tech Index actually rose 1.6% in the Asian session. We also have to keep an eye on the Japanese yen. After 5 consecutive days of losses relative to the dollar, it is a stronger yen this morning. 133.87 is where we trade. You now have the Bank of Japan, Japan's finance ministry, coming out saying, we are concerned about how rapid the decline in the yen has been. We will take action if necessary. necessary. So that is supporting the currency. And finally, I would just point out that in the New Zealand bond market, we have seen the 10-year yield rise for 9 days in a row, up 7 basis points overnight. 3.925% is where we trade, Matt. That is the highest going all the way back to 2015.
Yeah, I still find a yen at 133 and change pretty shocking. Right now we see S&P futures bouncing back and forth between gains and losses, but of course, yesterday we had a 2% drop in the cash trade, and there's real concern. I'm not really sure if it comes from the ECB, because didn't you expect that from the ECB? But obviously the widening spreads in the periphery are problematic. We'll hear about that from Anna in just a second. U.S. 10-year yield right now just over 3%, actually coming down a little bit, but higher than it was at this time yesterday, 3.0216. And as I was saying, when we see U.S. yields over 3% recently, that's definitely bad news for risk. For risk assets. In terms of NYMEX crude right now, you see it coming up a little bit, but only at 121.69. Only, I say, because yesterday we were up over 122 for Texas Intermediate, and Bitcoin right now off 0.5% and just under $30,000, but at 29,995, not far away. Anna, what do you see in terms of European markets?
I see a lot of red on the screen today, Matt. That's what I see. The European equity markets firmly in red territory. And I'll draw your attention to this southern part of Europe here, the FTSE MIB, the benchmark over in Italy, down by 2.6% in today's session. Now, we knew we'd be weaker here in Europe today. We needed to play catch up with the latter day losses on Wall Street that you guys saw in yesterday's session. But this has gone further, and it has a dynamic of its own. There's certainly an Italian dimension which we need to discuss here. So I put the FTSE MIB in, shows it down by 2.6%. And in fact, nearly all stocks on the FTSE MIB are in negative territory. UniCredit is a good example of one of the banking stocks under pressure today. And you see at the bottom of the FTSE MIB, a lot of those financial services names lined up and losing ground today. This is a little bit of a tantrum in the bond markets, and it's certainly coming out of the periphery of Europe, and in particular, Italy and the short end. The 2-year yield jumping today, just as it jumped yesterday. And we've seen actually the 2-year yield gaining around 40 basis points, just less than 40 basis points since that ECB meeting. So this is moving pretty quickly as the markets adjust to a new regime, to higher interest rates still to come from the ECB. What there was not much mention of, or at least in the market's view, not enough mention of, was the tools that the ECB has available to it to tackle any fragmentation, any breakup risk around the euro. And so when there was not enough said about that, the market thinking seems to be, well, let's see if we can test the eurozone a little bit on that front. And that's what is happening here, it seems, in the Italian market. Now, no one's saying that this is 2011, but it's just a little flavor of that to keep us on our toes this morning. Credit Suisse down by 3.4%. One we talked about a lot, Kaylee, this week, and maybe this is the last day I'll put Credit Suisse in here, but just to finish off that story, after State Street came out with yet another statement, this time being more explicit, saying no, there's no merit to these reports that we're interested in buying Credit Suisse, and so the stock falls today.
Not anymore.
Yeah, well, Anna, I'm sure a lot of Credit Suisse investors are going to be glad that they have a weekend and a couple of days off from that story. Now, of course, we are very close to the weekend, but we still have a full day to get through. As for what is ahead today, President Biden will be delivering remarks at the Port of Los Angeles. He's going to be hosting a leaders retreat, a working luncheon with heads of state and government as part of the 9th Summit of the Americas. Of course, he's probably going to talk about inflation as well. Then it's the Bank of Russia rate decision. That's at 6:30 a.m. Eastern time. And finally, the big event of the day, U.S. CPI data comes at 8:30 a.m. New York time, Matt.
All right, we'll be watching for that for sure very closely. The inflation data is key, obviously. Speaking of that, Mohamed El-Erian, almost a year ago, accurately forecast that elevated U.S. inflation would be persistent and not transitory. He says now it may not have peaked. He spoke with Bloomberg's John Farrow yesterday.
What worries me, John, and you're not going to like this because it's looking forward, the June month-on-month print will be worse than the May month-on-month print. I think those who boldly said inflation has peaked and it's coming down may have to change their minds.
Let's get more on today's U.S. CPI report with Bloomberg's Danny Berger. So, Danny, what are we expecting? Obviously, Mohammed thinks we haven't seen the peak, but others have really boldly stepped out and said we have.
Yeah, we've seen a lot of those bets come on, especially, you know, the retailers, the concern there of stockpiling, people not buying as much. But look, at least for this figure of last month's CPI, it's definitely not going to show that we've already peaked. It's expected to be 8.3% for yet another month. Sure, some of the core might have cooled down, but it really is that energy picture and that food picture, all the commodities driving it higher. Now, this debate as to whether it's peaked, I do find it really fascinating because it's just this ever-evolving conversation around inflation. Is it transitory? How long will it last? If it is lasting, have we peaked? Is it just going to be high at a lower level? We did see some bets back off of that. Let me take you into the charts for our radio listening audience. I do have break-evens. I am armed with them today, 2, 5, and 10-year. And it did at first look like they peaked out around March and started to trend downwards, but now they're just starting to get nudged up again. And this is the fear really present throughout the market. You have Michael Hartnett from Bank of America saying that we're still in an inflationary shock, we're heading into a rate shock, and at the same time, growth shock comes next. That was also really echoed by Drunken Miller yesterday at the Sohn conference, Stanley Drunken Miller, saying that, look, he is concerned because inflation's high, the Fed's gonna have to get aggressive, they're behind the curve, something a lot of people have said, saying that if you're predicting a soft landing, it's going against decades of history. For his part, Anna, he's not buying stocks, he's not buying fixed income, basically just commodities is all he's left with.
Okay, buying commodities, still more room in that trade then, according to him. Now, Bloomberg's Danny Berger, thank you very much for that. So China's inflation picture, let's get to that story. It moderated in May, leaving room for authorities to ease monetary policy and add stimulus to shore up the economy. Meanwhile, Shanghai will lock down almost everyone in the city this weekend as COVID-19 cases continue to emerge. Let's get more with Enda Karin, our chief Asia economics correspondent. Enda, as soon as we get excited about reopening trades in China, we're greeted by new headlines of lockdowns. Bring us up to speed.
Indeed, most of Shanghai will go back under lockdown this weekend from mass testing, and that seems to be the approach that China is going to lean on now. They want frequent testing, they want to test large-scale populations at any moment, and just as you said, when it appeared Shanghai was getting out of the lockdown, they're going backwards. The inflation numbers you mentioned, well, they told the story about the lockdowns as well. Consumer price is very subdued, 2.1%, really reflecting what's happening with consumers there, which is obviously pretty low confidence at the moment. The producer side of things was also subdued, 6.4%, representing commodity prices coming off their boil. And that weaker inflation will allow the authorities to put more support into the economy. And when you consider that Shanghai is going under another lockdown this weekend, clearly more support will be needed.
Well, and of course, the COVID zero policy, just the pandemic in general, Enda, has kept Chinese President Xi Jinping in mainland China for over 2 years. The last time he did a trip abroad was in January of 2020, and yet we have news now that he may be traveling to Hong Kong in a couple of weeks.
He may be traveling. It hasn't been confirmed yet, but July 1 is an important political anniversary here for when China resumed control of Hong Kong 25 years ago. There certainly are preparations going on the ground here for a major leader to visit from Beijing. Staff in various facilities and hotels are undergoing quarantine. A local school actually is going to undergo quarantine so the kids can be ready to be part of the festivities. The thinking is that maybe a big leader from Beijing will come down and add to the reopening feel of Hong Kong as it diverges away from the mainland's policies, and there's a hope that perhaps they might even ease up in the hotel quarantine required when you land here at the airport as well. But as I say, no confirmation of which leader is coming yet. All we know is that at least one state leader is expected to come, and it's expected that Hong Kong will edge towards reopening in the second half of the year.
All right, Enda, thanks very much. Bloomberg's Enda Kern reporting from Hong Kong. Now, let's get back to the U.S. The House committee investigating the Capitol insurrection blamed then-President Donald Trump and his persistent denial of his loss of the election for triggering the deadly attack. It drew on video testimonies from the White House aides at the time, text messages, and other materials.
January 6th and the lies that led to insurrection have put 2.5 centuries of constitutional democracy at risk. The world is watching what we do here.
President Trump had told them that the election was stolen and that he was the rightful president. President Trump summoned the mob, assembled the mob, and lit the flame of this attack.
Joe Matthew, Bloomberg Washington correspondent, joins us now for more key moments from the hearing. How much weight did they bring to these allegations, Joe?
Well, look, that's a good question. I don't want to necessarily judge this process here in what is the first of about a half dozen hearings The final is also expected to air in prime time. Look, some of what we heard last evening, we've actually heard before. It had been leaked from this committee, including Donald Trump angry at the White House, reports from within the West Wing about his tacit approval of the attack as it was happening, his suggestion that Vice President Mike Pence deserved to be targeted by the mob. But we saw new footage from the attack last night, bringing back visceral memories of January 6th, the level of abuse that law enforcement took. As you can see, a Capitol police officer there on the left of your screen testified what it was like to be knocked unconscious by the mob. The committee shared clips as well from high-ranking Trump White House officials, and it was remarkable to hear from them in their own words for the first time. Former Attorney General Bill Barr telling Donald Trump that claims of fraud were BS without saying the word. Trump's daughter Ivanka saying that she respected Barr and believed the AG at the time. Of course, Republicans, Matt, call this effort illegitimate and unconstitutional, but members of the panel say they will prove coordination, if not conspiracy, to overturn the election, beginning with a White House meeting in late December with Donald Trump, Rudy Giuliani, and Sidney Powell. They say it was just an hour after that meeting ended, Matt, that Donald Trump sent the tweet saying that January 6th was the time to come to Washington. It's going to be wild. And over the next couple of weeks in these hearings, we're going to hear about the coordinated attack on the Capitol, according to the officials on this panel.
And we'll look forward to your reporting on that over the next couple of weeks. Thank you so much to Bloomberg's Joe Matthew. And of course, you can also listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. A big underperformer today is DocuSign. This is the e-signature company, allows you to sign documents digitally. It reported after the bell yesterday. Earnings missed expectations. It also cut its billing forecast for the year. Analysts say that's a sign of weak demand, and the stock is getting brutally punished for it in pre-market this morning, down 24% before the bell. Another stock lower before the bell is Netflix. It was actually downgraded at Goldman Sachs. The analysts there putting $186 price target on the stock. That's about a 3.5% decline from yesterday's close, and lo and behold, in pre-market trading, it's down a little more than 3%, trading at $186.80, so only 80 cents away from that new target. One more positive story, though, is really across the Chinese tech ADRs that trade here in the U.S. Of course, they all were down yesterday after that Ant Group IPO story was proven to be not really a story at all. Ant itself saying it doesn't have those plans. So Alibaba was down about 8% in the Thursday session. On this Friday morning, though, rebounding, Anna, it's up about 3.5% in early hours.
Okay, we'll continue to watch that. Coming up on the program, we'll be back to the theme of inflation. Shemin Soa Power joins us, head of inflation trading at the Bank of Ireland. What is the detail that she's watching for in today's CPI report that will help us understand the future direction of inflation and the future of finance? Goldman Sachs CEO David Solomon reveals his best guess about what changes will drive the industry over the next 30 years. Plus, the forever chemicals crisis has come to Europe. How a tunnel project revealed extraordinary levels of toxins near a 3M factory in Antwerp. Read more by typing NI Big Take into your terminal. This is Bloomberg.
Of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York, and Kaylee Lyons, Anna Edwards with us out of London. Now, I'm looking at the fragmentation, that is to say the spread between the peripheral countries' bond yields and the German Bund. We are on the highway to the danger zone right now, as you can see from this chart. Joining us is Dana Albaltaji to talk about what this means for Christine Lagarde and the ECB. You know, a lot of people have said, Dana, that there might be a dual mandate for the ECB that we don't really know about. But actually, is it possible that fragmentation just leads to out of control inflation, and that's why they're so concerned about it?
Yeah, that's absolutely it. And what you're seeing in markets right now is a return to risk. It's like a risk norm, you know. Italy for a long time was trading as though it was a lot stronger than it actually is. And it's now returning to a place where we understand it was before. However, this time around, because of all of the bonds that it issued throughout the last 2 years, it's got a lot more debt. So the concern that you're seeing here is that as that spread widens, people are starting to wonder how that debt burden will be handled.
Yeah, Dana, especially as we've got one of the big buyers of this debt stepping away, and that's the ECB, of course. It's not 2011. Help us to keep level heads here. We haven't got spreads at those kinds of levels. But given we haven't even seen the ECB hike yet, and we're seeing this kind of response in credit markets, that, I suppose, is what makes some people nervous.
This is exactly it. I mean, it's not just happening as rate rises are on the horizon. It's also happening as inflation is still red hot. It's also happening with the prospect of economic growth being slower than people hoped. So you've got a lot of elements here that is really raising the whole risk fear.
Yeah, at least the whatever it takes guy is in charge. Exactly. So, you know, we've got that. But Dana, thank you very much. Bloomberg's Dana Albertaggi joining us there with the latest on the markets. And for more market analysis, check out MLIV Go on your terminal. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
A lot what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. Outgoing Hong Kong Chief Executive Carrie Lam says the city can't function as a global financial hub if quarantine controls remain in place. The city still imposes a mandatory 7-day hotel quarantine on international arrivals, despite business groups' calls for it to end. Hong Kong's border with mainland China has been closed for more than 2 years. Meanwhile, Bloomberg has learned that UBS Group is losing 2 senior industrial investment bankers for China. Sources tell Bloomberg that Yang Kun Ho, a managing director, and David Chen, an executive director at UBS's investment bank in Hong Kong, have recently resigned. Bankers in Hong Kong and mainland China are struggling as an unprecedented crackdown on private enterprise and travel restrictions slow deal-making. Amazon doesn't want to get into a bidding war for the rights to stream Indian Premier League cricket matches. Bloomberg has learned the company plans to withdraw from a heated competition for one of the world's most popular sporting contests. The surprise move leaves the field open to Ambani's Reliance, Disney, and Sony. The rights have been estimated to fetch an unprecedented $7.7 billion. And the yen's pushing higher today after 5 straight days of losses. Japanese officials are concerned about the pace of the currency's decline. In a statement following a 3-party meeting of Japan's Ministry of Finance, the Bank of Japan, and the Financial Services Agency, officials said they would act appropriately if needed. The yen is trading back below 134 per dollar, but Matt, of course, that is still just off the weakest level for the yen, going all the way back to February of 2002. The differentials between the Bank of Japan keeping policy easy and central banks around the world, ECB included now, that are on a hawkish tightening path is quite wide.
Yeah, well, if this is what hawkish looks like, I think someone should tell the ECB what other central banks are doing. But yeah, in terms of the yen, it is pretty amazing to see it at this level, and it'll be interesting to see what this means for Japan's economy, you know, in terms of importing deflation.
Yeah, absolutely, with the high cost of commodities as a result. And interesting to watch dollar yen when we get that CPI print, because if this is all about, out of the US, I mean, because if this is all about interest rate differentials, then what people read into the Fed's response could be interesting for dollar yen and other crosses. Coming up on this program, we'll talk about US CPI. Shemin Sowa-Power joins us, head of inflation trading at Bank of Ireland. This is Bloomberg.
but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Mohamed El-Erian says U.S. inflation has not peaked. Today's CPI print is forecast to top 8% once again. China's moderating inflation is set to give policymakers more room for easing. Meanwhile, Shanghai prepares to lock down 7 districts this weekend to conduct COVID testing. And a House panel investigating the January 6th insurrection opened public hearings with a primetime TV presentation. U.S. lawmakers have accused then-President Donald Trump of inciting his supporters and then ignoring pleas to call off the mob. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Matt, European equity markets then were refusing to follow US futures higher, it seems, this morning as we preoccupy around stresses, fragmentation potential for the periphery.
Yeah, it's one of my new favorite words, actually, fragmentation. US futures are higher, but only by 6/100ths of 1%. So it's not like we're headed to the moon. And of course, yesterday in the cash trade, we were down 2%. I think that's one of the biggest stories. You know, the fact that U.S. markets continue to crater by so much leads one to ask how much longer or how much further can this bear market go, if you believe that it's a bear market. Right now, we see U.S. 10-year yield coming down as investors buy that debt, but it's still higher than where we were at this time yesterday. So 3.0271 on the U.S. 10-year yield. And NYMEX crude is rising, but it's still lower than it was at this point yesterday, 121.83. Generally, we have a relatively high level on U.S. yields. We have a very high level on Texas Intermediate, and we have an incredibly boring, unchanged level on Bitcoin, $30,024. I may make the call, Kaylee, to drop Bitcoin from this board unless it moves above 32 or below 28.
Yeah, I want to go back and watch all of our shows from the last, call it, what, 4 weeks and see when the last time was that Bitcoin wasn't trading around that 30,000 range, because it really has been a very, very long time. Now, there is some more interesting action happening beneath the surface of the market when it comes to pre-market trading, and the fact that there is one stock that could lose a quarter of its value come the opening bell. That would be DocuSign, the e-signature company. It reported after the bell yesterday. Earnings missed expectations. It cut its billings forecast. As a result, that stock is down 24% in early hours. Some group of stocks getting a lift, though, including Chinese tech ADRs. They were all under pressure yesterday as there was questions around that Ant-IPO revival. First, it was reported China was considering it. Then China and Ant said, no, that is not the case. So you saw those stocks pressured. But now investors seem to be deciding we are still optimistic that the worst of the regulatory crackdown is over, even if Ant doesn't ultimately IPO. So you're seeing Alibaba gaining back some of the losses of yesterday. It's up about 3.7% before the bell, as is Baidu. And DiDi Global, that Chinese ride-hailing company, is up by more than 4 percentage points, Anna.
Yeah, so a lot of Chinese tech in focus there. And let's have a look at where we are in Europe. And it is, as I was saying earlier to Matt, a bit of a gloomy picture, and one that fails to keep up or fails to be dragged higher, if you like, by sentiment over in the United States. So Europe seems to be in a bit of a gloomy place this morning. Stocks Europe 600 down by 1.25%. It's the Italian market that really is leading us lower. FTSE MIB down by 2.6%. Nearly all stocks on the Italian FTSE MIB are in negative territory. In particular, the banking sector, some of those banks losing more than 4%. And that's what you might expect at a time where we see yields going higher, and yields going higher in Italy at a faster rate than they're going higher in Germany. That spread is widening. And so here's the Italian two-year yield, 1.53%, and that yield higher by nearly 40 basis points just since the ECB meeting. Now, it's not 2011. We shouldn't get carried away with this story, but a lot of people asking what the ECB is prepared to do if we do see fragmentation around the Eurozone, if we do see stresses in the Eurozone, what they're prepared to do to keep yields under control, and that seems to be where the market's thinking is right now. Credit Suisse, just to wrap up this one for the week, this stock down by another 3% today. We started the week with gloomy thoughts around Credit Suisse because of that profit warning that they delivered once again. Then we got a lift because of speculation about a takeover. That speculation has been firmly put to bed now, and so the stock retreats once again, Matt.
All right, very interesting stuff. I'm looking at break-evens here because Mohamed El-Erian yesterday told John Farrow he sees inflation possibly moving higher. A lot of big names, including Ed Hyman from Evercore ISI, have come out and said inflation has peaked. Let's bring in Shemin Shoer-Power, Bank of Ireland Global Markets Head of Inflation Trading and one of the best forecasters of inflation in Bloomberg records. So, Shemin, what do you think in terms of inflation? It looks like companies like Walmart and Target have stockpiled so many T-shirts that they don't see it, but companies like General Motors and Ford and Tesla still can't get enough cars off the lot or on the lot.
Hi, good morning. Thanks for having me on. I actually agree with Mohamed El-Erian, and I think there is at the moment a bit of a disconnect between the inflation market and nominal rates market, whereas the discussion on the nominal rate side is more focused on the growth slowdown. Actually, inflation market is much more worried about the inflation outlook. We have been revising higher our projections yet again. So we are not in the peak inflation camp, and we are not in the camp that believes that peak central bank hawkishness is actually behind us. Today, actually, we are expecting the inflation print to come out on the high side as well. So market expectations range from 8% to 8.5%. We are closer to the higher end there. And we believe that, especially on the services side, the pressures are there, but also on the commodity side. So obviously, we are seeing Brent crude at the moment about $120 per barrel. We are discussing that China will eventually reopen. US driving season will kick in, and there's huge amount of pent-up travel demand. So we actually see the risk of oil prices moving closer to $150 per barrel in the second half of the year. And we believe that the peak of inflation is not behind us, but again, in the third quarter, we can see US inflation prints closer to 9%.
Okay, it's closer to 9%, so not the peak then that we're seeing at the moment, Shemin, and you've got some clear thoughts then on oil prices. How much of that oil price forecast, though, relies on China recovering? Because we see headlines about reopening in China, and they're quickly followed by further headlines about lockdowns.
Yeah, absolutely. There it looks like the timeline will be delayed. But looking at energy commodities, that market is super, super tight. And if we also look at the market reaction last week when the OPEC supply increases were brought forward and an increase was announced, actually market didn't really react to it at all, because we see that actually a number of OPEC countries already cannot meet their production quotas, and there are very few countries which still have spare capacity. And we are actually seeing that market to remain very tight. And we are also seeing, obviously, the Russian supply taken out of the market, which contributes to the tightness. So, yes, China will be one of the issues, but we still believe that the demand is very strong. And as I said, with the travel demand kicking in as well, we are actually seeing risks on the upside.
Well, on the subject of demand and going back to the balance between goods and services, Shemin, we've already seen some demand destruction kicking in for discretionary goods. How far away are we from demand destruction in services as consumers face higher prices for necessities like food and groceries and gas?
Yeah, I mean, we don't think we are at those levels. Obviously, what we are paying a lot of attention is where the real incomes are. And real incomes are getting crushed as the cost of living is increasing very sharply. But we are still believing, especially on the services side, we know that the companies are actually not under pressure and they can pass these cost increases on to final consumers. So we don't think that pressure will be over. We are still seeing further pressure on services prices in US going forward. And again, things like airfares and travel-related components like lodging away from home, but also on the housing side, we are still seeing upside pressures and we're not seeing any demand destruction yet.
All right, Shemin, thanks so much for joining us. Shemin Shoer-Power there of the Bank of Ireland Global Markets talking to us about inflation. Coming up, we're going to discuss food inflation with Judy Gaines, president of J. Gaines Consulting, and we're going to continue to talk about inflation as we wait for the CPI release and probably a little bit after as well. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Now, with US CPI due out at 8:30 Eastern Time, we focus in on the rising price of food. Last month, we saw a 1% month-over-month increase in food prices. To discuss more, we bring in Judy Gaines-Chase, J. Gaines Consulting President. Judy, there are many dimensions to this. There's the pressure that in developed markets people are feeling on because real wages are declining in the face of higher costs of living. Then there's the emerging market story, which could be a whole lot more dire. Let's focus on what's happening in developed markets for a moment. How much upward pressure should we consider there is still to come from food price inflation? Or is this something we can say a lot of this has been priced in already?
Well, there's two things. First, the prices of the raw ingredients have increased, but they're not at what I would say nosebleed levels, historic levels. What's really causing some of the food inflation is the increases in packaging and manufacturing costs and rising labor costs for the manufacturers. And so it's become a tsunami of price rises, not just in having a quick pop in sugar or cocoa prices or coffee prices. There's more to it this time.
So is there anything that the government can do about it?
No, I mean, it really has to run its course. And the key part to that is, in terms of the raw ingredients, we need good weather. So we had some pretty poor growing conditions last year in Brazil, for instance, which is the largest producer of sugar and coffee in the world. You had a extended drought and you had a record number of frosts last July. And so that damaged production. So we need to have the higher prices cause producers to take action to increase supply. And at the same time, higher prices also cause demand to shrink. And it takes time.
What's happening, Judith? I'm from the great state of Ohio, but I don't go home that much these days. What's happening to the American farmer? I mean, for years, they were subsidized. They were paid not to grow. They were throwing away the excess food that they did actually harvest. What is the American farmer doing right now?
Well, the American farmer was trying to plant as much as they possibly could. The unfortunate thing is that there's been this dome of heat that slowed plantings and caused some problems. And, you know, they hope for rain because that's what's really needed. So, for example, Texas, where you have a huge cotton crop, only 15% is actually emerging right now. So you need to have the good weather to get the crop started.
Well, on the subject,
note.
Judy, of weather, of course, we talk a lot about the issues the food supply is facing now in terms of the war in Ukraine, the labor shortage that is out there, fertilizer issues, all these things that seem supply side driven at this moment in time. And yet we are also in a world in which the planet is warming, weather events are more extreme, including drought. I mean, how do you think about longer term ramifications of climate change and how it's going to affect the ag market for years to come, not just right now?
Well, one of the things that has to happen is technology has to catch up. So that's in place already, where you have more disease resistant varieties, you have shorter growing cycles. So seed manufacturers are working within the industry to try and create plants that can tolerate some of the new extremes in the weather. Some of the weather is just based on cycles, and you have confluence of long-term cycles that impact the market. So for instance, we had low sunspots last year, and you had this hole in the solar vortex, and that helped to usher in a lot of the cold weather, which caused the damage to the coffee and sugar crop. This year, we're now back to neutral conditions. And so La Nina is going away, and we're looking now towards El Nino.
Judy, it seems like there's a lot of environmental factors then to consider. There's also war in Europe, and that's cited by a lot of people as putting upward pressure, of course, on food prices. I saw an assessment by the UN Maritime Organization that to take mines away from all of the Ukrainian ports where a lot of grain and other products are trapped would take months. Do we have any sense of what is trapped there and how long we have to get it out before it starts to before we start to price in even higher food prices?
That I'm not an expert on, but I can tell you that other countries will pick up the slack because they understand what's happening. And that's why, say, sugar, my areas of expertise, say sugar and coffee, well, coffee is not really impacted because it's not a major growing area. But as far as sugar, trade flows get adjusted. And we are shifting to a small surplus for the 22-23 season. And so that's not going to have a long-term impact. You know, if you look back, I've been covering these markets for almost 40 years. And I remember when Cuban sugar production collapsed with the fall of the Soviet Union, the breakup of the Soviet Union. And Thailand started increasing their sugar so dramatically, we wound up with oversupply.
Finally, Judy, how does the strength of the dollar factor into all of this?
So when the dollar is strong, then people aren't buying U.S. commodities. And it also behooves producers to want to sell faster. Right now, we have a situation where we watch very carefully the relationship between the Brazilian real, the Brazilian currency, and the U.S. dollar. And when the Brazilian real has been very weak, then you have stepped up exports from these countries, and that helps to depress the market.
Judy, thanks so much for your time. Judy Gaines-Chase, J. Gaines Consulting President. Thanks for joining us here on this program. Coming up on the program, the future of finance, Goldman Sachs CEO David Solomon reveals his best guess about what changes will be driving the industry in the next 30 years. We've seen big changes over the last 20 or so. What do the next 30 years have in store? We will get analysis. This is Bloomberg.
And behind me, you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Anna Edwards in London. Now, the internet, smartphones, the euro, and cryptocurrencies are just a few of the innovations that have revolutionized markets in the past 3 decades. And Bloomberg's Sonali Basak asked some top executives for their best guesses about what might drive the biggest changes between now and 2052. Here's what Goldman Sachs CEO David Solomon had to say.
The big macro trends are around, around AI. The big macro trends around biopharma and biotech investments in trying to find ways for our energy sources to be greener over time.
Now, Solomon's comments are featured in the June-July issue of Bloomberg Markets, the magazine, which is actually celebrating its 30th anniversary, which is why Sonali is looking out over the next 30 years. And Sonali Basak is here with us for more. So, Sonali, it's a really great piece. Of course, you can find it in the magazine. You can find it on the Bloomberg. Let's talk about some of the takeaways. What role did energy play when you talk to these big players?
It was so interesting because 3 out of the 6 CEOs we spoke to did talk about the energy transition and said that it would be one of the biggest innovations innovations of our time. So when David Solomon spoke about it, he spoke about it in the vein of public-private partnerships being needed. David Siegel of Two Sigma also said that the government needs to play some role. And the CEO of Macquarie talked about it in the vein of agriculture changing. But it's clear that the energy transition is one of the things that people see as in the early stages similar to where the internet was in 1992.
Yeah, and really interesting to think what public money might be needed for, I suppose, in that context, Janali, whether it's the new technology or whether it's helping the old technology limp on as long as we need it to. Now, how big a role did crypto and maybe, I should say, blockchain play in these conversations?
It was incredible. You had the CEO of NASDAQ saying that the technology exists for every asset in the world to be digitized in some way. And the CEO of Citigroup, Jane Fraser, said that the world will be virtual and boundless, and we're moving towards a virtual, boundless economy. David Solomon also talked about it. This is what he had to say.
I happen to think that blockchain technology is an early version of technologies that will ultimately be used to further digitize the infrastructure of financial services. Because while there are a lot of good things with blockchain, it's not a great technology for a large number of transactions at a very high speed.
So you did see him talk about the limitations here as well, and that's scalability. That's something that Adina Friedman of NASDAQ also talked about, as well as crime management is what NASDAQ is looking at. The fact that if crime management isn't taken seriously, that's the big caveat to blockchain adoption. But, you know, let's see how this moves on. The idea here that every asset in the world could be digitized is something that a lot of people spoke about. David Siegel of Two Sigma also said that blockchain could be a major technology moving forward, similar to the internet. But you can't take for granted here that some of these things may not be adopted as fast as one can expect, and that's really the big hurdle in the next
Okay, so several people talked about blockchain, several people talked about the energy transition. Was there any wild outlier in your conversations? What was the craziest thing you heard?
The craziest thing, it's interesting, this is not the craziest thing, but an undertone, something that was recognized but not really played up a lot was medical technology in the wake of the pandemic and mRNA technology. A lot of the executives brought that up, and the potential for there to be medical technology that changes the course of human history. So let's see in the scope of priorities where that takes off in terms of capital allocation and the amount of public and private investment that goes into it.
Shonali, thank you very much. Thanks to Shonali Basak for bringing us her story there. You can read more in the June-July issue of Bloomberg Markets, currently celebrating then its 30th birthday. And Kaylee, we're looking ahead to CPI numbers. We're looking ahead to the inflation print out of the United States. I asked a guest earlier, you know, is it dollar-yen you focus on? What's the asset that's going to be really watched through this? He was saying that for him it was credit spreads, high-yield credit in particular, was where he was going to focus.
Well, and it'll be interesting, too, to see how the market would react to a cold print versus a hot print. Remember, we're still expecting it to have an 8 handle, but if this data sends some kind of signal that the peak of inflation is not yet actually behind us, that it may still be in front of us, I think that's really what would see the outsized market reaction. So really looking forward to that data coming up in just about 2.5 hours' time. And Matt Miller is actually going to be joining Lisa Abramowitz and Tom Keene on surveillance today to talk about it. So you know we'll tune in to whatever Matt has to say, Anna.
We absolutely will. Bloomberg Surveillance is up next then with Tom, Lisa and Matt. They'll take you through all the details of that inflation print. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think Europe's falling into a recession. It's got a tightening central bank now for the first time in a very long time.
Really, it is going to come down to, do we see those high inflation prints? Do we see those hawkish comments?
There's a very narrow path between an inflation problem or a growth problem.
The low-end consumer is really feeling the pinch of these higher gas prices and higher food prices.
I think you could see a bear market rally, and I'm going to say that it's a bear market rally rather than a full-on rally.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on a most important, a consequential Friday. Matt Miller in for John Farrow and Lisa Abramowitz. It's real simple. The world will stop at 8:30.
We get that CPI reading for the month of May. A lot of people looking for the core CPI to be the silver lining in what otherwise is a dire picture of inflation that continues to persist above 8% in the United States. Looking for some sort of easing when you take out energy and food. How much will the conversation be, Tom? Can we strip out these key components when you see the consumer crimped again and again?
Well, the consumer's not going to strip out the components, folks, but this is the polarity that we see in this report today. And Lisa, the pros, Global Wall Street Watching Surveillance, is going to look at the core level, that 6% inflation level.
The idea here is stripping out some of the exogenous crises that we've experienced, whether it's the Ukraine war, that Russia and the invasion of the nation, whether it's lockdowns that are reinstating themselves over in Shanghai and China, what that does to some of the supply chain disruptions. If you can strip out some of that, what do you have underneath and how much does that matter? Are we looking at airfares? Are we looking at retail items? Is that what we're looking at in terms of gauging out the persistence of this inflation?
President Biden on his way to Long Beach and Ed Ludlow in California with the president today. He's looking at $6 a gallon gas. We are advantaged this morning to look back to Christine Lagarde yesterday and to look forward to where Europe and America go with this inflation. Matt Miller has lived it in Europe. Matt, explain to me the difference between 6% inflation in Germany and 6% inflation in America.
Well, clearly in Germany, they had already high gas prices, and we're already facing high energy prices across the board, whereas here, that's a new thing for us to deal with. We have inventory issues here piling up, as Kathy Wood told Ed Ludlow just the other day in Bentonville, Arkansas, that they don't really have in Germany right now.
Interesting.
So we could see goods prices here come down where they're not going to see that there.
The partition this morning at 8:30 with Michael McKee on the goods dynamics versus the services dynamic. And again, that key core level that many are talking about. I want to do a data check right now to get us started here. And it's as quiet as you can imagine. Look at what equities did yesterday with that drop, red and green on the screen today. The VIX 26.43. The NASDAQ with a little bit of lift, but I don't want to put much to it because Miller's with us. We got to do Bitcoin. I'm sorry. 29,000 on Bitcoin, under the 30,000 level. Oil doesn't give it up. 124 on Brent crude, rounded up. I think that's an important statistic this morning. And dollar with some legitimate dollar strength, or is it Euro weakness? Moments ago, we can report this on Bloomberg Surveillance. Euro with a 105 handle, 1.0596. And I really want to point out Jordan Rochester at Nomura with a note yesterday looking for a 104. He has been dead on. At the wall this morning, Lisa Abramowitz.
Yeah, with the euro, it's interesting to see that even after what somewhat hawkish statement from the ECB, even still, you're not seeing that euro strength persist, as the Fed is expected to have to respond to what we get out in 2 hours' time. 8:30 a.m. is U.S. CPI data for the month of May. What the pros are looking for is the core CPI, stripping out energy, stripping out food, and they're expecting it to decline to 5.9% from 6.2%. The idea here is a deceleration in some of the other components outside of food and energy. Does this matter? And really what I'm looking for is underneath this, real wages. Are real wages continuing to go negative? Basically, the amount that people are getting paid very much failing to keep pace with the price of the basic goods that they buy every day. And how much can that persist before you start seeing it bleed into sentiment, bleed into what they actually end up buying? And we do get a read on the latest sentiment from the University of Michigan for the month of May at 10 a.m. And this is expected to continue to decline to the lowest that we've seen back to 2011, Tom. This is what people are watching to determine whether you start to see a loss in momentum of the consumer.
Yeah, it's very important here, folks. I'm going to show a chart here in a minute. Lisa, why don't you finish up with the president in Long Beach, and then I want to talk to you about what we see in consumer expectations of inflation.
At 1:45 p.m., President Biden will be at the Port of Los Angeles talking about inflation and perhaps the one of the very few things he can do to try to address this, having to do with supply chain issues, how they can possibly ease some of those frictions. His hands are somewhat tied, though, and this is the issue for Democrats. They can say, we have this issue, we have this issue, we can blame this person, we can talk to the Fed, but at the end of the day, some of these issues are just out of their control, so it's a very difficult message to dovetail ahead of the midterm elections, Tom.
Very good, and then futures at -2, Dow futures at -60. The VIX elevated and truly elevated through the week from a 23 level out to 26.47. Here's a chart that for me matters, and this will affect all of our conversations today on inflation. As Lisa mentioned, it's about 8:30 this morning in inflation, but it's also about the guesstimates of where we are heading. The University of Michigan expectations out 5 years, looking an additional 5 years out, is back to where it was in 2006. This is extraordinary and is a good lead into someone with experience of this, which is Kit Jukes of Societe Generale. Kit, are our inflation expectations unanchored?
They're certainly giving up most of the kind of super low inflation of the last decade or so. That people have accepted that that's not coming back anytime soon. That the market, I think generally markets and people struggle between the idea that transitory means a few months and that permanent is much longer than that. And so we flip. But yes, people, I think, have become used to the idea that getting inflation back to 2% isn't feasible in a single economic cycle, given that it's coming from so many different angles, or given that it's a series of waves washing across the shore, one after another, until we feel the full effect.
Kit, did the ECB yesterday change the dynamic, change the message, change the tone for the Federal Reserve as we head into this key CPI report?
Did they change the message? I think they made it clear that an inflation-fighting central bank is more or less saying, we just got to get on with this. We just have to do it. The ECB is, all sort of tied up in the sequencing of the end of asset purchases and then starting slowly and all the rest of it. But the underlying message, at one level was we got to get on with this and nothing else matters. And then the second message, which really scared markets a little bit, is we don't really have a plan to what to do if peripheral bond spreads blow out. So they're thinking about doing that until there is a plan.
We got to get on with this next month, right? I mean, we're going to get on with this at some point, was the ECB's message that I heard. I think tied up is the right phrase to use for the European Central Bank, because they can't really get on with anything, or else they blow out spreads the way we've seen. I mean, fragmentation was the word of the day yesterday, and if they want to fight inflation, they're going to have to really hurt the peripheral countries.
Yeah, I mean, in a sense, we might settle at a wide level. So far, you know, the interest rate costs that the governments in Southern Europe are paying are nothing like what they used to be. You couldn't call this a crisis. You couldn't call the level of spreads a crisis. But we know that the biggest buyer of peripheral debt in Europe is walking away in, what are we now, 2 weeks' time. You know, we're going to find a clearing level, and we might not find that. And Mario Draghi must be staring at it thinking, how did this happen?
I want to conflate two things in here, Kitchukes. One, I want to go to your morning note and the observation that we're moving from a goods inflation over to service sector inflation. Of course, when you're an Arsenal fan, folks, you call this flights and pints just to make it more articulate. What's the quality of the inflation you will look for today beneath the headline data?
I'm looking to see how much of the stuff that we see in normal life is already coming through the system, because this is this idea that there's waves of inflationary pressures. Now, in Europe, you see it terribly clearly. Everybody wants a summer vacation. Everybody is happy to pay. No, everybody is going to pay a high price for an airline ticket, a very high price for a pint of beer, go to an airport and get somewhere where it's consistently sunny. I expect to see that in all sorts of bits of the CPI report that I wasn't expecting it. This is much harder than trying to feed through the effects of knowing that chip prices affect used car prices. So I'm nervous that today I don't see a high figure, but I see lots and lots and lots of bits of the US CPI index showing upward pressure.
What number, Kit, do you think is going to really affect the dollar and how strong it can get versus the euro versus other major currencies?
I think today, today if we got no fall in core CPI inflation, so if that was still had a 6 handle on it, I think that would be a cause of concern. But in a sense, I think it would have to be very bad today to spook the market, because the base effects, for once, are so friendly in terms of keeping it contained. But it's the month-on-month change is still alarming. And what I would worry about is there's been a lot of people embracing the idea that, oh, you know, this is the peak, everything's going to be better. Yeah, this is the passing of one wave while another one arrives with a bit of a lull in between. But, you know, these waves can flatten you.
Kitchukes, thanks for the brief this morning with SocGen in London. Greatly appreciated. Lisa, what I think is so important here is the bipart between global Wall Street, which we'll cover in depth at 8:30, and the reality shown by rents, shown by those core expenses which are taken out. Energy, rents, that's all anyone's talking about in America.
I was looking at a study yesterday that showed that 34% of the budget of lower income Americans now consists of paying an energy bill and paying for gas.
Yes.
34%. But that also, the budget has also been taken up increasingly by how much higher rents are, how much higher food costs are. So that budget for disposable income, that budget for going out and having fun and buying things is shrinking. And you are starting to see behaviors change. How does this show up in CPI, given the fact that this is definitely a very different story of the haves and the have-nots?
And Lisa, of course, with that chart in her brief, folks, of the negative wage growth that we've seen, the integrand of that, the duration of the negative wage growth is tangible. That will be part of our analysis at 8:30. Matthew Miller, Lisa Bramlett, and Tom Keene, please stay with us on this most consequential day as we look at inflation and the future of price in America. Futures at -4, Dow futures -68. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The Biden administration is trying to avert another inflation-spawning logjam at the nation's busiest seaport. President Biden will visit the port of Los Angeles today. The White House is closely watching talks on a new union contract for 22,000 West Coast dock workers. A collapse of the negotiations risks a work stoppage that would snarl U.S. supply chains still suffering pandemic disruptions. U.S. lawmakers investigating last year's riot at the Capitol on January the 6th have accused then-President Donald Trump of inciting his supporters and then rebuffing pleas to call off the mob. The panel opened public hearings with a primetime TV presentation. In video testimony, then Attorney General William Barr said that some of the fraud claims that Trump pursued publicly were complete nonsense. Amazon doesn't want to get into a bidding war for the rights to stream Indian Premier League cricket matches. Bloomberg has learned the company plans to withdraw from a heated competition for one of the world's most popular sporting contests. The surprise move leaves the field open to Ambani's Reliance, Disney and Sony. The rights had been estimated to fetch an unprecedented $7.7 billion. Shanghai will briefly lock down nearly all of the city's 25 million residents this weekend for mass testing as COVID-19 cases continue to emerge. The flare-up is causing more disruption and triggering a renewed run for groceries just days after the city exited a 2-month shutdown. Health officials are testing to root out any silent transmission of the virus, a key tool in China's COVID-0 arsenal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
January 6th and the lies that led to insurrection have put 2.5 centuries of constitutional democracy at risk. The world is watching what we do here.
President Trump had told them that the election was stolen and that he was the rightful president. President Trump summoned the mob, assembled the mob, and lit the flame of this attack.
Thompson of Mississippi and Cheney, always of Wyoming, there with this most important committee last night. Whatever your politics, a nation either riveted on it or ignoring it. It was theater last night in America. Joe Matthew has provided leadership on this for Bloomberg. Of course, he owns the high ground of political conversation with Sound On and joins us after his exhausting evening and, of course, the work through the day. Joe, I think for our international audience, you're going to give us an explainer. David Brooks alludes to this in the New York Times. What's next? One day after this committee, 1 week after this committee, what is the goal of Washington?
Well, this is a great question. That was just the open last night, the opening act here, Tom. We have about a half dozen hearings scheduled. The first and last, we understand as well. That last hearing will be broadcast in prime time like we saw last night. A lot of people are trying to prejudge these hearings. We've heard from the Republican leadership in the House that call this unconstitutional and illegitimate. Donald Trump himself yesterday with his own rebuttal calling this a political hoax. That David Brooks column you mentioned suggesting that this is the wrong direction altogether and we should be investigating political violence in this country. But we did hear and see some new things. Some of it was very compelling last night, particularly to hear from former Trump, high-ranking Trump officials speaking in their own words. Bill Barr, Ivanka Trump, Jared Kushner, all illustrating that they knew that this was a fair election and that they actually told the president this. We have 5 more hearings, though. The committee says, Tom, that it intends to connect the dots and demonstrate the existing threat. It's not just about what happened on January 6th, although I will tell you that the revelation of this meeting on December 18th, in which Donald Trump, Rudy Giuliani, Sidney Powell, and Michael Flynn were all in the room, prompting the tweet, inviting people to come to Washington on January 6th when he said it's going to be wild. They say that was the beginning of what was coordination.
What is to look forward again, Joe?
Yeah.
What is the legal outcome of what you just said? What is the next 1 week out, 1 month out, after the election in November of what those people said in the room, or is it just theater?
That's going to look, a lot of this is going to be theater, and a lot of people may not believe what they're hearing. A lot of people, like I said, have prejudged this. Whether or not they accomplish their goals is a question as we start these hearings. They've conducted over 1,000 interviews, though, so it's very difficult to tell exactly what they're going to roll out here and what they will demonstrate as a present threat against the electoral system here. Liz Cheney, we heard from extensively last evening, along with a couple of witnesses here, were giving us a taste. The question, though, that you're asking, Tom, brings us to the Department of Justice. Will they refer people for criminal charges after these subpoenas have been handed out, after this case has been made? And that remains unclear.
Perhaps that's the legal side. How much is this all aimed at energizing the base heading into the midterms?
Well, look, a lot of the timing here probably is, and they also have to remember with regard to midterms, they've got to get this done. The minute that Republicans, as we expect, take the majority in the House, assuming that happens, and by the way, Republicans will have their own report on January 6th, you can expect to see this whole thing go in reverse. And they have promised to issue subpoenas to Democrats as well. This committee will be dissolved as soon as Republicans take control if that happens, so Democrats don't have a lot of time to make the case.
I just feel like they might be wasting time here, Joe. I mean, I'm as concerned about this as anybody else in the intellectual elite, right? I'm paying as close attention to this as anybody else in mainstream media, but half of the country does not care at all. You know, half of the country was watching the Ranger game.
But that doesn't mean this isn't an important exercise. If you listen to that Capitol Police officer last night, Is it, well, look, an attack on the Capitol is inevitably going to be fairly partisan, Matt. And when you look at the images that we never saw before last night, to think about the attacks that these law enforcement officers endured, never mind the potential attack attempted on our electoral system, it's pretty hard to turn away from this as a journalist.
Joe, one final question. We have the mayor of Bolton, Mississippi. We have Cheney, who's the piñata of the Trump side of the Republican Party in court. This is not the Watergate hearings. You're not old enough to remember that. I am. Why is this distinctive from the one hearing we all remember, the Watergate hearings?
Well, look, we have to remind ourselves that there are two Republicans on this panel. I know that Matt says this is partisan, and that is what the Republican line is, because the minority leader in the House, Kevin McCarthy, did not get the opportunity to appoint his own people here. Liz Cheney and Adam Kinzinger are Republicans, though, and you obviously have a bipartisan, at least in terms of D's and R's committee here. Whether or not this captures the American people to the extent that Watergate did, look, we're in a very different media landscape and a very different political environment now. Joe, it's very difficult to compare the two.
Get a 20-minute surveillance nap sometime on the afternoon as you wander to 5 p.m. this evening with the conversation into the weekend for Washington. Mr. Matthew, of course, with Bloomberg Radio and Bloomberg Television. Lisa, I want to bring it right back to the inflation report. On my screen, what matters is curve flattening. It was tangible yesterday.
And it continues today. The idea that the report will just force the Fed's hand to go faster and harder against inflation, slowing growth over the long term. And this really dovetails into the political discussion as well. This is the key issue. Whatever else you put out there, this is what's going to drive people, literally and metaphorically, to the election booth for the midterm elections. How does that rearrange things? What can this administration, and frankly, on a broader sense, what can we do to alleviate some of these pressures?
We now have a moment of silence here at Bloomberg Surveillance worldwide for Matthew Miller is paid in euros. How about that euro, Matt? Weaker with a 105 print.
Yeah, you know what? I'm the only one here without a CFA, so I can't wait to ask William Lee, is a weaker currency good for an economy, or is a stronger currency?
Oh, Matt, that's the question of the weekend. You nailed it. Absolutely. A++ there. And Matt, what do you think? For Germany, for Finland, is a weak euro good?
Well, on the one hand, they can sell more of their stuff, right? I don't know what they make in Finland, but in Germany, obviously, it's an export-oriented economy. So that's good for growth, but on the other hand, a lot more inflation when you're paying more to import goods, and there's higher demand for the exports.
I really want to point out the key distinction that I've seen through the week, which is our prism of Japan, which is the export of Toyotas and Toshibas, is a little bit different, to say the least. Lisa, your observation as we go 2 hours out to inflation.
You mentioned Japan. They're actually getting worried. They're trying to jawbone a little bit of a strength there, so that we are seeing that. But really, 2 hours to this inflation read, how much does this change the narrative with how sticky this inflation is, Tom?
Foreign exchange, the prism of this 8:30 report, DXY a 103, euro under 106, a 105.99 in euro, yen rather right now 133.78. At 8:30 on inflation, this is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
2 hours to go from the most important data point of the week. This is Bloomberg surveillance on Bloomberg Radio, Bloomberg Television. Right now, we are looking at a little bit of a turn under the market's hood, but interesting to see the S&P is down and NASDAQ is up. This is a new trend as people rethink what is possibly a safe trade and what is not. S&P basically down only 0.2%, NASDAQ unchanged, but yesterday we saw this strength come into play as people start to think about slower growth and not just rate hikes and what that will do to the big tech complex, and this bleeds into real yields and frankly yields. At the short end, you see two-year yields going up, and you see the long end yields going down. This is yield curve flattening, Tom. This is what you were talking about, as people expect the Fed to have to respond to a CPI print that is likely to be quite hot, even if it decelerates slightly. And then over the longer term, we are still going to see that low growth reality, and the 30-year yield continuing to gain, actually. Yields lower after a really solid auction yesterday, Tom.
The distance here of 3.15% on the 30-year bond. And Lisa, you really wonder how that bleeds into the housing market and the mortgage industry.
Perhaps mortgages aren't going to come in that quickly, but I take your point that we are going to see perhaps some relief on the long end as people calibrate the growth perspectives, not only in the U.S., but also globally. The euro losing value today versus the dollar. I think this is fascinating given the hawkish message yesterday out of the ECB, Tom. They are going to start a rate hiking cycle. They are leaving a 50 basis point rate hike on the table at some point this year. What has it done to the euro? Not much. Euro now at 106, down from the 107 level that we saw yesterday. The dollar continuing to gain strength because people are expecting the Fed to have to go aggressively against some of the inflationary headwinds, regardless of what the drivers are, even if they are oil, even if they are food.
Lisa Bramwitz, thank you so much. Breaking news right now on Russia. Some real action here out of the Bank of Russia, which maybe has been the one stable institutional platform in a Russia at war. And it's very simple here. They migrate on their rates. They see annual inflation right now of 14 to 17%. In the year following, 2023, 5 to 7%. We'll continue to follow that story. Right now, though, so important is the view on American inflation. And we're thrilled to bring you William Lee. He's chief economist at the Milken Institute. And, of course, truly an international perspective, including service at the IMF. Bill Lee, Matt Miller asked a really intelligent question. Is a weak currency good or bad for your economy? Let's start with the dollar, ascendant and resilient. President Trump would have said, let's go, weaken that dollar. Is the dollar too strong as we go into this key report?
The strength of the dollar really is telling you that the U.S. is a very attractive place for global investors. A lot of money is flowing into the U.S. because this is the place where investment takes place, innovation takes place. But in terms of inflation, it certainly feeds inflation. The strong dollar is one of the things that's capping the amount of U.S. inflation. For Europe and Asia that are more export-oriented, for sure, it's going to be the weakening currency will help their exports. But if you're ECB and you're concerned about inflation, that's the last thing you really want to see is a weakening currency, the weakening euro. So it's mixed message, but depending upon what your objectives are.
You are expert on the cultural treatment of price change, the panic. We all know the cliche of wheelbarrows of Marx in Germany, but far more than that, Bill Lee, explain the cultural divide of inflation on the Pacific Rim versus inflation fears in America.
Here in the U.S., we have not had inflation for almost a generation, and we've forgotten what inflation does. And I think in what you see in Asia, where you've seen runs on currencies, you've seen crises with weakening currencies and exchange rates that are feeding the inflation in Asia. The one thing they don't want is inflation, and you see a much stronger kind of defense being put up. Here in the U.S., the Fed has got to regain its credibility that it is serious about inflation fighting, because in March, when it came out with this immaculate disinflation FOMC forecast of lowering inflation without any change in the unemployment rate, it really lost it, and the markets were pricing in 5-year break-even rates at over 3.5%. Right now, the Fed has got this hawkish talk because it really has to establish the fact that we are aggressive, we're going to be doing whatever it takes. And for currencies, as far as the currency is concerned, the speed matters. The reason why Lagarde has had almost the opposite effect on the euro from their hawkish talk is that she's giving the impression that they're going to take their time raising interest rates in Europe, whereas in the U.S., it's a clear signal from the Fed. We're going up and we're going fast.
Bill, I love immaculate disinflation. How much did China change that narrative single-handedly almost because of the lockdowns, because of the slowdown there, because of the increased supply chain disruptions that lead to higher prices and slower growth for the U.S. and for Europe?
Absolutely. So China changed the picture in the sense that we have a much longer lasting and persistent inflation than we would have had in the past. The supply chains are completely broken. It looks like, given the zero tolerance policies that President Xi has put in place in China, it's unlikely the supply chains are going to come back anytime soon. So the Fed, though, has got one objective in mind, which is regardless of where supply is, it has to bring demand down to where we can equilibrate supply and demand. So that makes the Fed's job even harder, because a lot of the things that it cannot control are pushing prices up. And it has to be much more serious about how it tackles that inflation problem. And by the way, we don't just have one policy tool now, we have two policy tools. Remember, we have a balance sheet out there, and the Fed has not really emphasized enough how strategic that tool is in being able to drain liquidity from the very hot sectors like housing and cars and consumer durables, and be able to maybe contour the trajectory of holding back demand in a way that avoids a recession.
Bill, what you just said is deeply uncomfortable, that they have to reduce demand in order to offset the dearth of supply because of supply chain disruptions. This leads to a higher unemployment rate. This leads to a deceleration that is bigger than it otherwise would be because of the supply chain disruptions. How high do you see unemployment having to go in order to achieve this dampening of demand, to bring supply and demand better into balance?
Well, Lisa, I think most economists believe the Phillips curve is dead. And anyone who relies on the Phillips curve to try to gauge the amount of unemployment you need to get disinflation is going to be wrong. But I think one of the things that we have to do is target inflation itself, regardless of where the unemployment rate is going. And that's where the Fed is essentially saying, is that we're going to try to get a softish kind of recovery, a softish downturn. And softish means a rise in unemployment rate to whatever level it takes to get that inflation rate down to 2%.
What level, Bill, do you see as being likely to achieve that?
At least another percentage point. I think right now, I think there's a misnomer that the unemployment rate is really the key guide. Right now, Chair Powell is looking at the level of vacancies. And I think that's, in a way, a mistake because there's a microeconomic disequilibrium in the labor market. There's a lot of job openings out there, but the pace of hiring has not picked up because the firms are trying to find better qualified workers, and that's really the key. And that the disequilibrium in the vacancy market shouldn't be taken as a source of inflation. I think that's a message that really hasn't been talked about enough, that the unemployment rate itself is a bad guide, but a worse guide is the level of vacancies.
You, I wonder what your view is on what Washington can do. As we're approaching the midterms, it seems like the Biden administration has kind of passed the buck to the Fed and saying, like, you know, they're the only ones who can deal with this. But obviously, policies, regulations have also led to this inflation. What can Washington do? What do you expect?
Oh, man, you're absolutely right. The one thing that President Biden can do is reverse his policies on oil and drilling here in the U.S. If we were to turn on Keystone, if we were to turn on the ability of companies to reestablish U.S. oil and energy independence, we would be much better off. Remember, we were producing about 13 million barrels a day of oil a day, and right now we're down to something like 10 or 11. That missing oil is what's contributing to a lot of that high pricing the gas pumps that we're seeing. And if we were to produce U.S. oil at the same level as we were several years ago, the world itself would be much better off.
Billy, thank you so much. With the Milken Institute this morning on inflation. Lisa, I want to get out front of this because Ellen Wald's going to be joining us here on oil price in a moment. And it's remarkable how Dr. Lee's conversation there dovetails with what we hear from Christian Malik at J.P. Morgan. That's simply about bringing on investment and bringing on supply, at least as a test of these surging gasoline prices.
And we heard that in Davos. There had been such a focus on ESG. There had been such a focus on investing in greener types of fuels. But now there was a different dynamic. People were discussing the need for fossil fuels in that transition. How do you invest in both? How do you get production up in the short term if over the long term you're hoping to phase it out? What is that dynamic, and how do you create the correct incentives for fossil fuel companies that are part of that transition? And Tom, that's a longer term issue. What does that mean in the short term when we cannot get the supplies on so quickly?
Lisa's got the Hummer H2 as she fills up. It's usually on fumes, and she fills it up. It's $230.
I'm operating
Nothing like what Matt Miller's got in the driveway, which is 4 pieces of metal that need to be filled up on a regular occasion. Matt, do you see demand destruction out there yet, where a gallon of gas is, or does it await above $6?
Well, what we are seeing is consumers filling up with less gas more often. So every time they go, instead of filling up the whole tank, maybe you put in half a tank, hoping that maybe prices come down next time you need to go to the gas station.
Or maybe you just can't afford it, Matt. I mean, I think you've absolutely nailed a behavioral attribute here, which separates global Wall Street from everybody else. You can't afford it. And Matt, the thing this week, the charge card usage in America, truly without exaggeration, is a moonshot.
Yeah, absolutely. More people putting gas on credit. And look, if you have a Ford F-150 Raptor with a 36-gallon tank, you're going to need to do that.
Well, we're going to have to do that. I mean, Elisa's tank's only 32 gallons, so she's like a VW Rabbit, you know.
All of this is false, by the way, for anyone who was actually wondering.
On oil, we're going to have a lot of conversation here on inflation today with futures at -7, the VIX 26.62. Coming up, she wrote Saudi Inc., President Biden in Riyadh. We speak with Ellen Wald of the Atlantic Council. Stay with us at 8:30 today, an inflation report.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukraine must clinch a new loan program with the International Monetary Fund. That is according to the country's finance chief, as efforts to fight off invading Russian forces push its budget and international reserves to the limit. Finance Minister Serhiy Marchenko tells Bloomberg that Kyiv needs more foreign aid from its long-standing donor and that early talks on a new aid package are underway. GSK is hoping to deliver the first vaccine for RSV, a respiratory virus that causes hundreds of thousands of hospitalizations in older adults each year. The UK drug maker showed positive results in a trial and plans to file with regulators in the second half of this year. It's a boost for GSK after it fell behind in the race to develop a COVID vaccine. More than 2 years after the coronavirus pandemic began, there are still questions about exactly how it started. World Health Organization researchers say more information and research are needed to look into the possibility that an incident at a lab in Wuhan, China, was the initial source of the outbreak. Advisors there say there should also be further study of a market that's been identified as another possible source. Hong Kong stocks are already rebounding at the fastest pace in the world, and a possible visit by Chinese President Xi Jinping in a few weeks could provide even more buying momentum. There are growing signs that Xi will join a July 1st ceremony to swear in new leader John Lee, as well as celebrate 25 years of Chinese rule. The Hang Seng China Enterprises Index has gained 16% since mid-May, outperforming every major benchmark in the world. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
It's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
inflation is being driven by energy, the fact is these oil prices are going to be at $120 a barrel or higher. So we're just going to have high inflation, even if the broader inflation pressures aren't that bad.
Good morning, everyone. Nick Benenbrook, he's international economist at Wells Fargo, which barely describes the brilliance of that conversation yesterday. He was just absolutely dead on. Lisa Bramwitz and Tom Keene with Matthew Miller in for John Farrow today on this most important inflation day. We're less than 2 hours away from Lisa, can I say the most important report we've seen in ages, like since time began?
This is key to see the deceleration that everyone is expecting, and then the underlying non-energy, non-food components. Are they really decelerating in terms of how much prices are rising, or are we starting to see ongoing strength that's going to really raise the prospect of stickier inflation?
Right now, Ellen Wald joins us. I can't say enough about her book, Saudi Inc. It is a window into the layers of the Ibn Saud family, the heritage of the family, and most importantly, the new family. She's senior fellow at the Atlantic Council. I guess Mr. Biden will visit Riyadh. It's not formally announced yet, but there it is, Ellen, is well. When he visits, can there be a belief that Saudi Arabia can adjust the price of a gallon of gas in America?